365, shake my hand, and welcome to another Traders War Room. It's actually great to be doing one of these at home. The traveling is starting to slow down, but we had an awesome workshop in East London. Shout out to the traders in East London. We did Monday, Tuesday, Wednesday, Thursday together for 4 days of in-person. So that was really, really great. Hope you guys are watching as well. This is War Room number 84. And so I want to quickly just get into what we're going to be looking at in this video. Please stay tuned. So I want to talk about the NASDAQ 100, S&P 500, the UK 100, right? With all the drama going on. I hope everyone is still holding their sales on UK 100, but we're going to look at that. The US 30, the J225, the China 50, the Russell 2000, the DAX, the Euro 50, the Australian index, right? And somewhere just straight after, we kind of like look at the indexes, right? Just across board. I will then kind of like just branch off and just give you guys some basic sentimental analysis, explain why indices seem to be pointing a little bit up since Thursday, Friday, and why you should be careful about that, why I think it's a bear rally, and where it is we're going to sell. So there's kind of like a lot of things that I want to kind of look into in this particular war room. After I give you that sentiment, we can then look at our Forex pairs. We're going to look at the Euro, and maybe let me just quickly move this around here. You're in this already with me, so let's just get it all done quickly. But we're going to look at some Euro pairs, pound pairs, DXY, AUD, Australian pairs, etc., etc. Just give us some room. Right. So it's not too bad, right? It's not a whole long list, but in total, by the end of this war room, I would have given out about 22 trading signals. So that's actually quite a big mouthful, right? And the way this works is, remember, I am a swing trader. So primarily what I do in these war rooms is I anticipate turning points that are about to happen in the future, right? With supply and demand, smart money concepts, and that particular articulation of price analysis, naked chart reading, and also just a basic overall well-researched background on the markets. And we are set and forget traders. That means you're not going to remember all these moves, right? So you want to set and forget, which means you're already good with risk management, right? Because if you're going to be allocating part of your capital into the future, you need to have a system how to do it, right? So we trade in clusters. That's number one, right? Inside the description right now, it's okay if you want to pause this video, right click this video and watch my risk management lecture part 1 and part 2, right? So that you know how to scale in and then set and forget all these signals that I'm about to give you. We've been doing extremely well, right, this whole year, right? So let's just quickly get into it. Start off with how we always start, right? Every day, in every way, I am getting better and better as a trader. Traders who affirm themselves generally have a good run, right? Please don't forget to check out the links in the description box. The course link, right? There's the overall course, which is our supply and demand trading, module 1, module 2, right? And immediately, once you join that at the current price, you also automatically get admitted to the live classes on trading psychology on the 1st of November. That's very important, right? But you can also just sign up for trading psychology module by itself right now on or before the 1st of November and be a part of that, right? So those links are in the description, right? So I really just want to start off with, dealing with these indices today first, right? And the reason for that is there's a lot going on. A lot of that has also got to do with the general market misconceptions where people start to make, silly mistakes in their trading. So you've been building this account for the last 3 months, you've been building your account, finally getting the swing of things, accumulate, and all of a sudden you take one bad trade on an index that takes 10, 20, 30% of your gains. It will break your morale. With poor trading psychology, you're going to bleed. You're going to keep hammering that account until it is nothing, right? So I generally always say it is so hard to blow an account, right? But because we don't have impulsive gates, we are unaware of second level thinking. These are all trading psychology hacks that I'll be teaching on the 1st of November. But because we're completely unaware of these things, right, we just bleed through our money and our accounts, right? Just like how a lot of people look at the charts and are completely unaware of what's going on, right? So it's absolutely incredible. I have not forgotten, like our last war room video. last week. Here it is here. I promised that if this video got more than 20 likes, I would drop a video breaking down the future of the pound, the Bank of England, the implications of all the drama that had been happening there. And this was before the prime minister even resigned. I didn't even know the prime minister was going to resign, right? So I'm going to keep my promise. Please look out for that video. It's going to be very crucial that you understand where this is going, how central banks are missing the mark again, and where we can profit from it. All right. So I'll be dropping that video Monday or Tuesday this coming week as promised. I appreciate you guys for giving this the previous forum over above 20 likes, and I'd like to ask for the same for this video. Let's get us to 20 likes again. And in this week as well, I'll be dropping a lot of trading psychology short clips just to promote the trading psychology module, because a lot of people take that lightly, and yet it is so accurate to say trading psychology accounts for about 70 to 80% of your trading. So if you don't want to take the full course, if you feel like, look, you've got your own trading strategy and it's not supply and demand, and you just want to work on your trading psychology, then just make sure you select the first link, right? But granted, you are far much more better just enrolling for everything right now, because at a premium discount. I mean, after the first, when the whole modules are put together, prices go up again, right? So please join. And remember, I will be doing this live 3 times a week with you for the whole month of November in terms of trading psychology. So you really want to get your second level thinking, mapped out. Right. So without further ado, thank you for sticking around with me. Let's start off with NASDAQ. And that's because it's a popular asset. It's very common, it's likable, and a lot of retail traders enjoy it, right? So if I feel like I need more space on my screen, I might remove myself out of the way. But right now we've got this simple asset that we've rode the NASDAQ, just perfectly. We've just been selling and holding. Sometimes we've had to close when there were bear market rallies, and then there was another Fed talk, and then we went risk off again, and a similar thing is about to happen, right? So a couple of things to take note of. I brought this up last week in War Room 83, so I'm not going to waste too much time. We cleared a demand. That's number one, right? So it doesn't matter what how this. I'm on the weekly chart, right? You see, we ended up high on the weekly time frame, and I need to explain to you why that happened, right? There was the mouthpiece of the Federal Reserve is the Wall Street Journal. So I don't know if you guys read Wall Street Journal articles, but it's just basically a sentiment check. The one I always recommend is Forex.live, but if you want to just subscribe to the Wall Street Journal, it's about $2 or £2 a month, or whatever it is. Anyways, the mouths is the informal, not direct, but very much direct. In fact, it's my opinion that the Fed uses the Wall Street Journal to kind of like lead the market in a specific way. Right? Powell has been very smart in doing one thing this year with the Fed rate hikes. He's tried as much as he could, right, reasonably could, to not rug pull the markets. Okay, that's number one, right? There was a semi-rug pull, but there hasn't been a really drastic rug pull where the markets are expecting a 75 basis point rate hike and they drop 100 basis point, or the markets are expecting a 25 basis rate hike and they drop a 75 basis point, right? There was one point in time this year, I can't remember when, where the Fed did what the markets were not expecting. And you need to understand this, right? This is extremely methodological of a central bank. They want to bleed out the market, not shock the market, right? Because when you shock the market and you rug pull, and that takes me back to talking about, what happened in the 1980s, and like these crazy rate hikes where they push the interest rate to about 20% just to control inflation. And we'll talk about that stuff in the pound video when I make comparisons, in the next videos to follow. But the point here is what Powell has done consistently throughout the whole year is it's been just stabbing the markets, making very slight cuts, right? Giving us an expectation we're going to continue breaking the market, and we should be doing 75 basis points per piece. Maybe we're going to do 75.50 towards the end of the year, as brought up in the summary of economic projections that I broke down a few videos ago for you guys. And I even showed you guys the dot chart. I explained to you guys how that happened, so please watch that video. But all of this kind of stuff that Powell kind of like really has been working on nice and slow is to bring the markets to meet up with the expectations. That way, they can actually track the impact and the influence they have and the effectiveness of these rate hikes, right? So there was a piece, long story short, that is starting to insinuate that there might be a Fed pivot point in December. And what that means in 10 seconds is simply that, look, instead of a 75 basis rate hike in December, the markets might get a 50 basis rate hike. And remember, the less the Fed hikes, right, the more the market starts to kind of like rally up and start to think maybe it's over, maybe the pain is over, etc., etc. And so that insinuation was almost kind of like to test the waters. And the markets Thursday, Friday have been kind of like pushing to the upside due to that. Now, there have been different Fed mini pivot points. There have been rumors of Fed pivot points throughout the year. And you can see on your chart here that every time that happens, there is what we call a relief rally, a bear rally. It is not a rally to take seriously, right? If you're a buyer, buy, but know when to get out, right? And so we end the week again on a positive note. We finally got a bullish engulfing pattern, and you gotta look carefully at the charts, because the charts will always tell you everything you need to know. Just right up here is a beautiful bearish engulfing pattern, and I think these two worlds need to meet, right? And by that I mean we could expect price action to fill the gap between the two, and as usual, I'll be waiting to sell than be in this market trying to buy in and out. I expect that Friday, just note this down, Friday, the 28th of October, if I'm not mistaken, Friday the 28th of October, the markets are going to get a big shock. There's a small tool that fundamental analysts use that most market participants don't look at, and it's basically the CPI of labor, not CPI data of inflation, but it's the inflation data of labor, aka wage price sparrow, where we're going to be looking at the cost of labor. And it's a small report that a lot of people don't care about, but I think the markets are going to use that to dump. So I'm telling you now, on the 28th of October, Friday, be very careful. Markets either go very crazy up or they will dump, right? And my thinking is if we have another bullish week, the week of the 25th of October, 24th of October to the 28th of October, then I'm assuming by Friday, markets will be well situated inside the supply, and I expect a drop, right? The drop could happen long before that, right? But on the daily time frame, this is what our chart looks like right now. And by the way, in my courses, I talk much slower. There's a whole lot of time for me to kind of like really slow things down, right? But right now, we're just on the move. I'm here to give you guys as many signals as possible in a reasonable amount of time, right? So we had this marked out last week, and you can see as soon as price arrived here, I did mark it in red. You can check the previous video. Yellow is supply, means sell. Red means cowboy. Green means buy. Green is my demand. I've been very clear about this. So and sometimes I draw white zones, which is be careful, or use it as a short-term trading area, not long-term, right? So markets arrived at the red zone that I marked out for you guys, and you can see price did fall, but just for 2 days. And by Thursday, Friday, with this room of the Fed pivot point, and we're going to talk about that halfway through this video, all of a sudden markets started to kind of like fight back, and there we are. We've got a bullish engulfing pattern on the daily time frame, and one could expect a series of events to look like this. So we could get a bounce back on 11,200, or price might even go as low as 11,100 and then start to shoot up, right? And then the question would be, by Wednesday, Tuesday, will we have cleared this area? That's the question mark, right? And for me, by the way, this is a trade for me. I'm not interested in scalping the market, even though some of these are long-term scalps, like a day or two. I have no interest in that. Nothing that I've done this year has remotely forced me. I've got so little buys in the market this year. I've been a very big seller. I'm definitely looking forward to seeing what's going to happen when price gets to about 12,200, 12,100, and 12,000. Sorry, the 12,000 area, basically between 12,000 to 12,200. I'm very interested in seeing if I can get very good sells there, and that's what I'm going to be doing. I'm going to be waiting for that. The trend line drawn is obviously the extended trend line from the very first time market started to fall. That's December last year, and January when I started to let you guys know this is going to be a very painful year for the markets, and I think that's going to continue. Interesting enough, Elon Musk did come out and say the recession for them, they're bracing themselves. Remember, I told you guys that there's going to be stock calls, right? So there's a lot of earnings reports, this past week, and as you all know, there's a little bit of drama with Tesla, as there always is. Biden trying to block Elon's, purchase of Twitter. We don't care about that kind of stuff. But from the way these guys are handling their books, it's almost as if they're preparing for recession to bleed into 2024. All right. So recession and inflation and the Fed, while those are three different things, they're very interconnected, right? Recession kind of like speaks to how more aggressive, if someone says, look, I think recession is going to be up until 2024, then there's at the back of their mind, they're also admitting that we're going to have a hawkish Fed up until sometime in 2023, right? Increasing the rates, right? And that's to deal with inflation. And then the impact of those rate increments and what it does to jobs and stocks and companies and the economy will then create this very progressive, violent recession, right? So to me, that was like, something to kind of like, listen out for and look and, into, right? So I've just drawn a short-term internal trend line here. This is more like a retail trader's trend line, right? And in module 2, I talk about the difference between drawing trend lines correctly and how retail traders will draw trend lines, and how a good trend line is one that's linked to perfect supply and demand levels. And so we've got this idea here to kind of like look at, right? Because sometimes trend lines represent liquidity areas where the traps are made, or so just be very careful, right? But I'm sure this week we'll see if this red zone will hold here. If it does not hold, then we know to look for sells up there. If it does hold, I won't be in these lower sells. I'll still be holding some of my weekly previous sells from above, and then we shall see where price goes, right? So this is kind of like a good week to kind of like watch price on the NASDAQ. What I'm going to do is I'm going to remove this trend line because I personally don't need it, right? So for NASDAQ, once again, we can expect somewhat of a creation of more buy momentum, right? If this rumor, if the desperation in the market persists on Fed, viewpoint. I mean, you guys have done the data with me, looked at CPI with me. You guys know for a fact, right, that there really isn't anything under the heavens right now that is pointing towards good news. All right, so we know to identify this as bear market rallies that will be sold at some point, right? So that's the Nasdaq 100. It's not the most interesting chart, but I know it's quite loud, right? S&P 500 is the next one. I find this chart to be more important. Why? Generally speaking, when we're measuring economic health, when we're measuring the stock market in general, the chart that everyone, any economist, financial market analysts, professional traders, banks, etc., the health of the general American economy is kind of like always weighted against the S&P 500. So it's a very important chart. And you can see it looks extremely similar to NASDAQ 100, right? And you can see here, this is the daily, and on the weekly, we've got the exact same thing going on, right? So where I've drawn this white line here on the weekly time frame represents that supply area on the weekly, and that white line then translates to my multiple time frame analysis on the daily. And you can see I've got a cluster of supplies there that I'm looking into dealing with, and I've got this inward trend line, right, that actually tucks price in quite neatly, just like I did right now on NASDAQ 100. And for me, it's more appealing to take a risk in these areas here for a sell, somewhere between, give or take, 3,880, so 3,900, give or take, right? This 3,900 area, so about 100 points area that will be worth investigating, holding when price hits there. I mean, with 0.01 on a healthy account, you can hold this zone, right? But the bigger the account and the smarter the risk management, right, the more money you're going to make, right? I have no interest in taking any sells here, right? If anything, just like NASDAQ, S&P 500, I'll wait to see if this area gets taken up, right? Again, for those of you who don't have my type of patience and feel the need to be in every single trade, then you really want to see a movement like that, right? But for me, like I said, I'm not that excited about buying anything in this market. I'd rather be on the sell side of things, right? But this is a big possibility this week. If it doesn't work out, then we are waiting for continuous drop in price, right? And moving forward, we'll have to then come back and map out how far price can go next, right? But please keep holding yourself, unless if this retracement to the upside freaks you out, then rather than bag those profits. But I think a discipline will keep us profitable, right? With the UK 100, like I said, I don't want to get into the whole drama with the Prime Minister right now, because that's a special video. I promised you guys that if the previous room got 20 likes, I'll drop, and I'm going to drop that video about the pound. What I did do this past week was an extra video on Bitcoin, very short video, just remind you guys that look, nothing's changed, right? Bitcoin is going to fall. I might actually change the thumbnail of this video by the time you guys see it. So as long as you know that the latest video, how far is the bottom, I think it's well worth listening to my argument there, right? But I will do the pound video, the Bank of England and whole breakdown, right? So this is where we were, like sometime 13 September. You should have 13 September, you should have 26 August, you should have about 6th or the 8th of September of swing trades that you're holding. I know this by head because I'm also holding them, right? We come here on Sunday not just to talk about charts, but to actually practically risk our money on the markets and take the trades. Your accounts should be growing. Like, I'm not crazy. I literally have a war room account that I literally share this with you guys all the time. I know where everyone's account should be, at least in terms of percentage gain. All right. Capital amount may differ. That means lot size differs, but percentage gain, we should all be the same, right? So if you're still holding UK 100, price has kind of like started showing some strong, revolting signs. So we need to start thinking. You need to kind of like make a very sharp decision, right? And my assumption is, the retracement could go as far as this area, which is just below 17,200, or so forth, right? And that might be kind of like a big chunk for a lot of people who are not used to kind of like losing money and then getting it back. And by losing money, I mean markets retracing. And so your equity value kind of like changes, and you feel like, oh no, I should close now, right? So if you're very much undisciplined, this is an opportunity for you to understand that we expect further retracement, to happen in here, right? If markets don't stop somewhere by this 50% fib level, right, then and markets proceed to the upside, then we have no choice but to wait for price to make contact with a fresh supply, right? So you have an option, which is to kind of like place your stop loss somewhere here, right? And this is what I would do, and this is what I'm going to do for my account. This is what I always do. Number one, place a stop loss here. We know that sell one. If you guys remember, I mean, if you're new to the channel, please subscribe. But I'm just talking to the family that's been with me for a while. You always have 3 entries on your trades that are all properly risk management allocated. Take profit 1 is based on where the swing is going, right? So you should have closed all of this for your trade number 1. Take profit 2 is always trail based. You trail your stop loss, you lock it here. Take profit 3 is always broken even, right? So I've got that broken even. Now, so technically speaking, the only trade I'm locking here is sell number 2 on this thing. And what I would advise that you do, if you do what I'm doing, is then open a second, or technically the 4th sell pending order here, right? So if you get kicked out here, you're going to get kicked out in profits, and then we can then retry to sell this asset, right? And that is if the retracement goes beyond the 50% level here, right? I've got a good video out on the YouTube channel on retracements, right? Beginner's guide, pro guide to retracements. Absolutely good stuff in there, right? So this is kind of like something to look out for, right? With UK 100, what they did with the pensions fund, markets have priced a lot of stuff in, but I haven't seen the type of movement that we want. Even with the pound, right? And I apologize for just breaking rank here, because I said I was going to go through a specific list. But if you look at the pound as a currency, it's literally at the bad news drawdown day, but for now it's still kind of like floating above. I'm going to switch my candlesticks, make them my Kinihachi, so we can actually see what's going on, right? And this is like a chart that has kind of like lost its head, right? There is literally no quantitative major turning point. if I remember correctly, like if you come back here to the governing time frame, this is the recovery of COVID 2020, right? Markets are just bleeding out. Like we spoke about this at the beginning of the year. Wait for it. You know, the pound was weird, you know, in January, February, right? Euro USD was just falling and the pound was retracing the upside. And I said, no matter what happens, pound is going to follow euro and even take over in terms of weakness, right? And we can see it. War rooms are important. War rooms are for you. This is the best way to get better and better every day for free. Like I should be selling signals, but there's no point. Rather, just create content and education around them. So do the right thing. Don't forget to like and subscribe. Please don't forget to like and subscribe. That would be very much appreciated, right? So there's a lot of things to consider when it comes to the pound and just the UK in general, right? So UK 100 for me personally, I see no need for me to be looking for buy setups. Like I said, I'm holding myself. The one that's broken even and sell number 2, and I'm hoping if markets fully retrace that sell number 3 will work since we've closed the first one. So technically speaking, over time there'll be 4 sells. This is what it looks like on the monthly time frame. This is UK 100, right? And you can see here that if this line breaks, this is just a psychological level. By the way, the trading psychology course, guys, is packed. I'll be talking for 2 hours, Tuesday, Wednesday, Thursday, 2 hours a day, probably 3 to 4 times a week. That's 8 hours a week, simply purely on trading psychology. This is not a course where I tell you, let your winners run and cut your losses short. What does that actually mean is what I will be teaching. What is second level thinking? How do you differentiate between these trades? What are the systems you can put in place to start to separate your emotions? How do you develop a winner's trade? It's not some small put together thing. When corporates fly me around to teach on their trading floors, very rarely do they want a trading strategy. Most of these guys are just hedging and doing big orders, right? And they are literally moving with banks and third-party flow. So they sometimes they want us for supply and demand, but for most of the time they want their floor traders to have trader mindsets. So this is a mindset course that I don't want you to miss out on. But inside there, apart from working on your trading psychology, it'll be my job to let you know how to identify the psychology of the other, your competitor. Very, very important. So there's psychological levels on charts that have nothing to do with technical levels, but psychologically, if specific areas break, we know what the head is going to do and how we manipulate that for profit. So it's actually a very important thing that you will learn in week 3. But if this line crosses over, we know, and we have reasonable expectation to believe that it will, then what's going to happen is, the hidden demand all of here has been filled. And what's going to happen is we're going to see a big drop, right? Because one would imagine that, this is either a retracement zone, excuse me, or weak demand. That's number 1. Number 2, it's within a psychological level that's already been kind of like tested and slightly breaking and weak. And if this whole area is removed, then we can expect a drop. And why wouldn't we? We've seen the biggest economies in the world fall. We've seen China 50, index fall. We've seen the NASDAQ 100 drop past 20% bearish levels. S&P 500 totally smashed. The SPY smashed. US 30 smashed. Your micro midterm companies, the Russell 2000 smashed. Like Nikkei 225, I've been teaching on the correlation between the J225 and the NASDAQ 100 smashed. Why wouldn't these small things, this London-based market fall as well, right? And so if it falls and we come back to this beautiful, I keep telling you that there's a need for the market to come back to 2020 levels, right? So look out for that. So you really want to start building sales, in my humble opinion, and really holding them and forgetting about them, right? You want money now, but you also want to make money now. There's 2 worlds hardly ever exist, all right? Build your swings and move on. See what your life looks like December, next year, etc. This is very, very good advice. Be very patient with the pressure for the markets changing your life, and rather be more intensive about creating a trader's process, right? So one more time, those links there, they're not there because, the pressure is you need to get this information as quickly as possible, right? I've got a couple of traders who sent me Instagram DMs and inboxes saying, damn, I wish I held my sells from June. Damn, I wish I held my sells from March. How on earth did you see that kind of stuff? It's literally because it plays out like this all the time, right? You can't do it if you don't know what you're doing. It's simple, right? But I see a PCP. This does look like a basin. Someone would say this is a basin. This was on Friday, right? Remember, markets have already closed. I'm doing this over the weekend. And on Friday, this index created a basin. Yeah, price could come up, sure. But this is also enough for price to continue to the downside. This is, I repeat, by next week Friday, we could have a candlestick like this. I'm not saying that's most likely going to happen. I'm saying there's absolutely nothing in this chart that is telling me that this is impossible, right? You could have a nice big, red candle, right? So time will tell. But if it does retrace, I've told you what to do on the daily time frame, which is to kind of like lock, if you're with me. If you're new to the channel, subscribe and start to wait for higher sell areas right there, right? So we shall see Monday, Tuesday, Wednesday, Thursday. Maybe we'll get back to the midweek reviews. We shall see, right? So this is quite interesting on the UK 100, and I've kind of like mapped out as clearly as possible what I'm going to be looking for there. Next, we've got US 30, and now this is now for the trader who is paying attention. Let's actually put these together because I think that will help. And this is why last week Sunday I told you guys to kind of like arrange your watch list like this. Now I'm going to quickly go through this quickly. Look at this. NASDAQ 100. Look at where price is on this red zone, right? So price is fighting back on the red zone. Just pay attention to that. Look at SP 500. Deep. The white zone here is the same as the red zone. You just look at this, weird candlestick. I'm going to go back to NASDAQ. Look at the setup, the language of price. Look at this. Look at this. You see this there? Look at this, hammer-looking candlestick. I think those of you who love price action and their patterns and think memorizing the names would make you profitable. You should know this stuff better than me, right? There it is there. And look at this. We've got this little patch to the upside, right? Almost like a broken trend line. Because to go to the 1 hour time frame, I'll probably slap a downward trend line and show a breaking point there. On the S&P 500, we've got the exact same situation. We've got this, this little hammer and exactly one green candle, 2 red candles, bullish engulfing pattern, just like NASDAQ. Now look at US 30, slightly different. One of these markets is a primary market. One of these markets is leading the way. One of these markets is more sensitive than the other. And because of that, we can then take that information and start to think what would most likely happen to the ones that are lagging a little bit behind. Once again, look where these markets are. Look where the bullish engulfing pattern is. That's the S&P. This is the NASDAQ, right? Interesting. And look where they're going. They're coming here to this pattern, right? Look at up here. 2 bearish, 2 supply blocks, 1 bearish engulfing pattern. And so it is reasonable for now to assume. It's just an assumption. We have to wait for price to break the zone. But we can project that maybe that will happen. Right, I don't care about buys. Right now, if I come to US 30 and I start to look for the same patterns, where's the hammer? The hammer is here. The very first one, like NASDAQ 100, like the S&P 500, on the US 30, markets have already removed it. Markets have already decided what they're doing with that area. Markets have already now arrived at that zone that we're waiting for on the NASDAQ, that yellow zone we're waiting for the S&P 500. So it is almost safe to assume that the NASDAQ might remove that place that's red, and I put a question mark, that S&P 500 might take out that area, right? So that buying might actually be slightly profitable this week, right? It's dangerous in my opinion, but slightly profitable for those who buy. And if this area gets taken out first on US 30 like this, and then markets start to drop like that, and price arrives at the same patterns, right, on S&P 500 here, and honors these supplies and also starts to drop, all we will have is supply engaged in S&P 500, supply engaged on the NASDAQ 100 dropping, same supply broken in US 30. The banks will create an original supply, which I teach a lot in my module 1 part of the course, so I'm not going to get into that right now, and the fall will continue. Another way to do that is then to update our Fibonacci to kind of like find out, man, what's going on. So I'm going to draw the fib from downward up there to up there. And if you're new to the channel, I want to repeat myself quite clearly. During war rooms, I'm not necessarily here to teach and slow down and do market breakdowns. I'm just here to give signals, right, so that you get them, so you know what's going to happen during the week for free. All right, and if you track our free signals, we are more accurate than all the premium things that you're paying for wherever you're paying. And you're more than welcome to statistically test that theory. Right, so this is where our Fibonacci is, and you can see that US 30 has arrived at a golden ratio area. And so I guarantee we really need to keep a lookout for how price reacts here, but we also need to anticipate that markets are going to remove the similar zones on the other side, and then we're going to see. So if US 30 is clearly 300-400 points ahead, right? What if by the time Nasdaq and S&P 500 arrive here, the US 30 is here and is selling? So for me, this is a very good place to wait, because I can already tell that this is not going to work, and this is highly contested as of Friday. All right, so this is going to be my supply. This is the only place I'm interested in placing a risk, right, where I'm interested in taking a trade, right? That's the only place I am that I would like to trade. And when US 30 gets here to this supply, I'm going to also then review where the rest of the American indices are. All right, I hope that made sense. If it did, don't forget to like the video. Right, the next index that I've been begging you guys to trade, begging you guys to look at for clarity and direction is the Japanese 225 that starts in the Asian session, which is absolutely crucial, very crucial. Right, and that's important. The fact that I'm saying that it moves during the Asian session because it's an Asian market right now. I've said this before, generally speaking. Now let's see if we can see something similar, right? You know that on Nasdaq 100 and S&P 500, markets are stuck somewhere here, right? So we've got the opposite of a hammer candlestick, but markets are basically here on the Nasdaq, S&P 500. We know that in US 30, this area has been removed, and you know, the USD's price is slightly ahead. But we know that on the Nasdaq and the S&P 500, we've got the similar pattern here where there's like a bearish engulfing pattern, another one, and markets drop. And so I would urge you that this is what you want to pay attention to this week. The US 30 and J225. Which areas are they going to get to first and start to turn? And can you correlate that and make money? When I teach, I always say markets are not hard. It doesn't mean they're easy. They're just new. It's a new way of thinking that you need, a new strategy, right? Registered students, 365 students waiting for new courses to drop. Make sure you've mastered the stuff, man. Make sure you've mastered the stuff, right? So why? Because remember, if you guys go back to my module 2 in the course, if I can pull up what the new thing looks like, right? So most of you guys are going to be added onto this new site, by the way, before the 1st, right? This is for registered students only. But if you come here, so I'm pretty much looking for the lecture, the old lectures that we have. That's module 1. If you come here on module 2 and you're looking for indices, right? Remember I taught on indices, and there's a specific lecture where I break the whole sessions, right? There it is, a deeper look into index trading. Money flows around the sun. If you just come back to this lecture video that I did for you guys in the course for how day traders think, how swing traders think, I think it was a 3-hour class that we did together. Yeah, I'm right, 2 hours 56 minutes. If you come back to this video here, somewhere in there, you understand all these things. Please master this stuff before new information drops, right? Because there is no reason why you guys should not be making money. All right, so please come back to this. Those of you who've got access to my course, right? So I would watch for this, right? I literally would be very much, keen on watching. We've got 3 big trades that we're running here, right? I've closed the first one, the first swing as usual. And then we had these clean entries here. I kept telling you to wait for them to get triggered. That got triggered in, that got triggered in. I told you the entries in a war room like this, and I'm telling you now again, I'm asking you to take me seriously now. Watch out for this. You've got 2 options like me. Number 1, I'll just simply set and forget. That's me. All right. So if my stop loss gets hit, it is already part of my risk management. That's option number 1, right? And option number 1, if you're going to sit and forget, you really want to target about 27,800. Always leave anywhere between 25 to 30 points per entry, right? And that means instead of having that there, you could have it just by the wick of this green candle, which is 27775, which is 25 points from 27,800, which is what I gave you, right? Something like that. and then obviously your stop loss there. I think, you know, GD25 is quite violent, sharp, and slightly expensive. So make sure you qualify, you have the accounts for it, and you're risking properly, and you're knowledgeable about what you're doing, right? And if this area breaks, then that tells us a whole story about where the markets are, right? Because we need to talk about Fed pivot points, and I will. This is very important. So as soon as I'm done indices, I'm going to break down Fed pivot points for you, right? So we know that's how I always know when the bear market rally is going to be. At the beginning of this video, I even said it before. Be careful. I only expect, you know, a serious downturn on the 28th of October, and that's the end of the week, right? So you could have, you know, a crazy upward week anyway. So just judge things I'm saying, and then come back to the charts for yourselves, right? So the next chart that we need to look at is China 50. Right, and this is I mean, we spoke about this, man. This economy is crashing. I'm not gonna close the sell that we're in, right? The last time we spoke about China 50, I'm pretty sure, if I haven't already, I will on Monday when I'm managing my trades, but I'm pretty sure I have already. I'll suggest you have your stop loss just above there, you know, above something like that. You know, log profits 13,300, so 13,000, sorry, so to speak. Just double check H4. When you log profits, you always want to have some type of reasonable market level to justify it. So like a supply or something. So if the supply area here gets broken, you know, then you know that we are in trouble, right? So I mean, this is clean, a clean, simple trade. And I kept telling you guys that the China economy is in trouble with the housing crash. And so this I'm holding. Why am I holding myself? I don't know yet if I have that much faith in any demands right now. All right. So I expect to see more bleeding. Right? This is on the weekly time frame. It sounds dramatic right now, but I do expect all this index to drop all the way down to the 10,000s. And only time will tell. Only time will tell, right? But there's nothing. There's literally, it's a coming to war rooms is helpful because we just build on previous entries. Some weeks we wait, you know, some weeks we compound, some weeks we close. But right now there isn't really, I'm not going to force a signal, right? There's nothing smooth and clean, right? Markets have come back. I wish I'd opened a sell lower here, but I didn't. This happened without me. So I'm just holding there and I'm locked there, right? And a big retracement could happen, right? So you have a place where you can take out some money for some profits for yourself. That's China 50. Sorry, let's just stick to our list here. I'm talking a little bit fast, guys, just to get through a lot of assets, right? So that we can actually cover opportunity. I've spoken about the sensitivity of Russell 2000 and why it's a very good chart to look at. During a crisis, because it will most likely react first than these mega caps, right? So we know what the structure relatively looks like on NASDAQ, S&P 500, US 30, and J225, right? We understand that there's a relative correlation between those four charts, right? And those four charts are very big charts. So now we're looking at a much more mid-cap stock, Russell 2000, right? But it's extremely sensitive to sentiment, to news, to tweets, to whatever. And we want to see if we can find likely structures or what structures you know, exist, right? So I'm quickly gonna so there's white lines. White lines might confuse you, but it's the same lines I have on the NASDAQ, right? Only the NASDAQ lines are red and these are white. We don't trade support and resistance on this channel. These are not support and resistance lines. It's just stuff that you will eventually learn, right? You'll learn about 365 numbers. You'll learn about the stuff in my module 2, module 1 in the course, right? So it's absolutely crucial that you hit these links here. So I can't really explain this right now, but for now, I can tell you that on the weekly time frame, first of all, we're at an almost type of equal highs from last week, right? And markets have relatively had a green week here as well, which makes sense based on the rumors of a third pivot point, right? But on a grand scale of things, I don't think the Russell is done dropping, right? I think the Russell has struggled and has somehow, you know, for now psychologically probably landed on what may seem like a demand, but I think price can go a little bit deeper, at least definitely into the red zone. And so that's what I'll be looking out for. On the weekly time frame, we can see that markets made contact with the bearish engulfing pattern at the end of this week. And so we'll see the sensitivity. So this is the chart you want to look at Monday, Tuesday, to kind of like see, how markets react, how deep into the zone can price take out the zone, right? What I know about, engulfing patterns is for the bullish engulfing pattern, you can expect price to retrace a little bit back to kind of like retest it. And we saw this on the daily time frame on S&P 500, NASDAQ 100, right? One green candle, two candles down. Like, guys, I'm not, check this out. Look at this. It's our war room. We don't have to rush everything. This is the NASDAQ. One green candle, two red candles, one strong bullish engulfing pattern. No engulfing, bearish engulfing red pattern. It's just a red candle. Cool. S&P 500, no bearish engulfing pattern. It's just a red candle. Cool. US 30, even worse. Blew through the roof. Very small red candle compared to the rest. No bearish engulfing pattern. Just blew through it. And then we looked at J225. All right. J225, I said it's going to move first based on the Asian markets. We have our first bearish pattern on J225. And now I'm saying to you, the Russell 2000 is sensitive, so we really want to see it. And here, we've got a bearish engulfing pattern, unlike just the two red candles that are not, being bearish. But my little girl is up and mom's away with a friend, and little brother is away. It's my turn to be stuck home, basically. So I think I'll have to continue this a little bit later. As soon as she starts making noise, I will end the video. It doesn't matter to you because I'll edit it together. But I'm just saying, it would be nice to do this in one sitting, right? So look at this. Russell 2000 has this interesting bearish engulfing pattern. So watch this, man. This is easy money, right? So yes, I'm in a self Russell 2000, but then, I made sure I use a small lot size because there are rules about areas of value, and that stuff is covered in module 1. Don't forget these rules, guys, in module 1. Areas of value have specific rules. Where is it? I don't know. There is supply and demand areas of value, part 1 and part 2. So that's lecture 5 and lecture 6, right? What type of an area of value am I dealing with, right? Is that area of value is fresh, not fresh? It's almost a 2-hour lecture. All that stuff is in the course. And so because of this area here is one of the first sales I'm in, lower, right? But I'm in with a very small lot size because anything can go. But to me, sometimes when price does this, this is a reinforcement of a level where they add more sell pressure, right? So we shall see what's going to happen, right? This is going to be a very good chart to keep track of, right? We've got a, order block on top of an order block, fresh touch hit here, retest hit with a new bearish engulfing pattern. If this falls, then you understand that the big caps will eventually start to follow, right? So watch out for it. But if this breaks to the upside, then always choose higher sells. Those of you who are not as eager like me and didn't enter here. So one of my trading psychology problems. So I have never experienced fear of missing out. It's not something I struggle with. And I think it's because of how I was mentored in trading. Fundamentally, when I was doing the Antonio Creel portfolio management course, right? That stuff, they deal with you thoroughly there. So I never suffer from fear of missing out. That's not a Leroy problem. Leroy problem is during the impulsive trades. That's a lot of trades and early entries. I love, let me not say I love. My problem is, generally speaking, I'd rather be first in the markets. I take these early entries and just anticipate the fall or the rise, right? So this is quite technically speaking an early entry into price, and I acknowledge it is my psychological mini wall, and I'm going to address all these in the trading psychological courses: how to identify it, why it happens like that, and then how to mitigate it and turn it to profits, right? So this is what I can advise you have a look at when it comes to the Russell 2000. If these areas fail, then we are coming back up here, right? So right now, yeah, only time will tell, right? And then we say next we're going to look at the DAX. This is quite an aggressive trade, and is or traded rather by very much aggressive traders. the DAX, right? I'm not in this market at all. Any zones that you see drawn up here were purely out of analysis with you guys at some point in time. It's been a long time since I was in the DAX, maybe 2, 3, 4, even a 4 month. Hello, Papa. Is the door open? Okay, shh. Go, go, go. It's fine. Sorry, guys. As soon as you get too agitated, I promise to just stop. Right. So this is this is my princess. The reason I live. This is tested demand. Prices really dug down in it. Right. I'm not a buyer in any of these markets right now. I think that's quite clear, and I have no interest in buying. If I'm being honest. And we shall see. All right. So on the weekly time frame, markets to me have engaged somewhat of a supply that was currently engaged in a supply, and on the daily time frame, I have no interest in trading this thing. But for those of you who want to, right, we've got an upward channel, so I'd wait for these areas here before selling on the daily. You've noticed I've switched to a Kinihashi because sometimes, Japanese candlesticks are not clear enough. Sometimes Japanese candlesticks need a little bit of work, need help, right? So if you go a Kinihashi, you can actually see the levels slightly clear. And right now, I think it will be prudent to just wait for a higher push before selling, all right, on the DAX. Okay, and then, after this, we've got the Euro 50, which I've actually thoroughly enjoyed. Princess to me feels a little bit agitated. I'm just going to take her out for a walk and to spend time, and then I'll come back and finish recording, right? But this is the Euro 50 here. This is the Euro 50, right? Similar to American indices, green candle, 2 red candles, push to the upside, right? I'm pretty sure the supply on the left is going to get cleared. I've marked this white because it's not the most convincing supply, but it could work. It could work. Go low risk here. But remember, if you've got a small account, then you want to focus on one specific cluster of indices. You really don't want to spread your small account across all this stuff. I'm just giving you guys a rundown of this stuff. Just so I want you to see the power of the Fed throughout the markets, not just American markets, like globally, right? Right, and then here we've got equal highs, never traded equal highs. That's a liquidity grab. You're always going to get chowed. So this is the Australian 2000. I'm definitely only putting a penny in order here. All right. So sorry if towards the end this felt a little bit rushed, but this is a good place for me to take a break. When I come back in this video, which again I don't know why I keep saying that because it will be edited together, I'm gonna then break down Fed pivot points, what they mean, how they've worked historically for 10 minutes. Then I'm gonna get into some currencies for the week. 365. Stick around. It's a good time to like and subscribe, right? But don't go away because I'll be back in a second. Right, we're back again. It's technically the next day, but it's just one long video for you guys. My little kid, well, we went to go play, and then my son came, then my partner came, and then it was just a full Saturday. Right, so I'm going to continue with the war room. Thank you for still watching along, right? For me, it's been 24 hours. So I just want to quickly recap. We looked at indices together. We kind of like have a clear view, in my humble opinion, of what I think indices should do, what we should look out for. And this next little bit right now, I want to talk to you guys about why. Because you know me, if you don't understand why, and I get busy for a month and I stop uploading videos on YouTube for a month, you still need to be able to understand the markets and make money for yourselves, right? I just read a comment on our public Telegram group where Alvin was telling someone, go watch the previous war rooms and back test the stuff. That is the best advice ever. Back test it, right? Don't take my word for it, right? So I want to explain why. So indices are pointing up, right? I think it's short term. I think there'll be a big sell-off coming up as usual, but it is based on a Fed pivot point, right? So a Fed pivot viewpoint based on the implications that we saw in the Wall Street Journal, right? The informal mouthpiece of the Fed. And I'll explain what happens when I see that. And I'll explain the difference between a Fed pivot point, right? And a pivot point here is always based on, oh, in December, the Fed might start to cut rates. Oh, next year, we're going to get a reduction. The market is based on hope here, especially the stock market, right? It's designed to go up. No one buys stocks hoping they go down, right? So that market is desperate for any slither of good news. And good news right now is the Fed's going to stop cutting rates. The Fed has inflation under control, or all the above, right? So every time there's a Fed viewpoint or a threat for a Fed cut rate, so instead of 75 basis point, we'll get 50. That's good news for the market. Instead of 100 basis point, we'll get 50. That's good news for the market. Instead of rate hikes in December, we'll skip December and continue in January. All that small stuff is good news. So as you're reviewing the tape, going through those headlines every week, like I hope you're still doing, because I haven't done it with you guys in a long time. But as you're reviewing that kind of stuff, right, what you want to check is that market sentiment. But I want to explain why just creating a trade idea just based on that without this deep explanation is dangerous for you, dangerous for your account, and will generally always result in losses. Right, so let's quickly share my screen so that you don't have just my ugly face here. And also I see, you know, sometime during the day, someone asked us to look at Euro Swiss franc, right? It wasn't part of my original list, but I've included it now. So I'm quickly going to have a look at Euro Swiss franc first, maybe, and then we get into the second part of the war room. We are still doing War Room 84. This is a perfect time for you to like the video, a perfect time for you to look at me typing War Room 84, a perfect time for you to subscribe, perfect time for you to really think about investing in yourself, right? You really need to get the stuff down. These are dead links from yesterday, kind of like you have to refresh everything. This is the course, so the new platform of the course and what it will look like when I'm finally done, right? But anyways, click here, register for the full course, or just register for the trading psychology module. 1st of November, technically in 7 days time, we are going live with that kind of stuff, right? So Uncle EG is someone I absolutely love, adore, and respect, because he opened my eyes to a lot of things a couple of years ago. Has asked me to look at Euro Swiss franc, right? So I'm not in it anymore. So let's see what the next play is. I personally would not sell now. Personally, there's something, you know, whenever price extended down there, I'm so glad I closed. And maybe let's start from the very beginning. I would assume that it's one of those assets without a body, without a major turning point. It's just an assumption. I can't remember correctly. Yeah, I'm right. I am absolutely right. There's no bottom here. There's no bottom for Euro Swiss franc at the moment. There's nothing at all. So I'm basing this off by just looking at the governing time frame, right? We are literally making it up as we go. Okay, Euro Swiss franc, there is no governing turning point. That was taken out quite earlier on this year. So March 22, you know, literally started to create new lows for this pair, and you know, price has been, you know, moving down low. And then the original major turning point was one that was set in December 2014, right? That's quite a long time ago, right? And you can see we've taken that out completely, and we're now starting to, you know, create some type of pattern. It looked like a PCP to the downside. This is so awkward, right? You know, if only this was like a red candle, this was a green candle, then it would make more sense. But there we have it here, but green and red, bearish engulfing pattern, a full retest, a very violent full retest, right? And we marked out previous sell areas there. I just don't know when we started selling, you know, Euro Swiss franc there, but I can go through my trading journal and kind of like review when we open and close those trades, or when I told you to open and close them, you know, so to speak. Seems like a while back, because I can't actually find it here, and I am glancing over my journal in a big rush. I have a nice book journal, and then I've got an express spreadsheet and right. So Euro Swiss franc, this was the 21st of August, War Room 77. So just check that out there if you just want a back play of what where price was before and what happened. Right, on the weekly time frame, we can see here we had a one-hit wonder, right? So I definitely tried to sell here. You see, very transparent, right? My stop loss got hit here. I don't know. I don't remember. Maybe we spoke about it on the 21st of August. You're going to have to review the tapes. Stop loss got hit, and then we had a second higher sell set up on the daily time frame. So here it is here. Got hit here, and then, you know, we waited to get tagged there. Clean tag. You know, I got 1:4 and then closed as soon as I started to see these. So by the way, whenever there's no major turning point, you're gonna get this from my module 3. But you know, these rejection weeks here, speak of demand creation. So I generally always close when I start to see that, especially on H4 daily. Those are like extremely, powerful time frames. So you want to adhere to it, right? So if someone wants to look to get into a trade now on Euro Swiss franc, this is kind of like what we need to then kind of like quickly discuss for another 2 minutes, then we move on, right? So Euro Swiss franc, I wouldn't sell again here, but that's just personally me, to anyone, Uncle EJ and everyone else, right? We've got a lower supply, which we know has been exhausted, right? So technically, that was the trade, but I decided to aim for the highest supply just in case. But you can see here, this was the sell idea that we had given out on the 21st of August, triggered on the 2nd of September, right? So about a week after that war room, this trade played out beautifully. And you can tell, when markets come back now, where markets are on Friday, I would say this lower supply is broken. And I would say this supply is absolutely got glass effect issues, right? And again, check out the course to understand some of these things, what glass effect is. I think I discussed that somewhere here when I'm looking at major turning points, and I look at somewhere here in areas of value, right? Or just check that part out of the course. Glass effect refers to areas of value that we actually can't trust anymore, because we are under the assumption that the sell orders or the buy orders in a supply or demand have been exhausted, right? And there's a way to calculate that, and we talk about it right now. So if you look at this supply, where price is right now, this is, very much a big pool, right, of sell orders, right? In massive rejection up there, retail traders talking about it, looking at resistance being played out, but we actually know for a fact that what's happening is the sell orders have been exhausted, and so we can't trust that level of resistance anymore, right? And then what happens is price then creates this bandage, right? Adds in a new set of massive sell orders, right? Technical analysis tells that there's a break of structure, and then price continues to fall, and we make our money here, right? We make our money there because let the banks move first, then we come in. Now, because of all of this here on the left, I see the rejection, but I don't trust it. I really honestly don't trust it, so I wouldn't sell there, right? Number one. Number two, if I just go back one time frame higher, we can see that we were taking very much short-term swings. Why? Because there's no confluence with weekly supplies, right? So the next big weekly supply is all the way up here. And I'm pretty sure Euro Swiss franc is going to make its way there, or at least that is where, my money is. Let's say we were extremely bearish, however, there is no major turning point drop. They've broken another demand for heading south, which we agree that it's best to sell than to buy this asset. The question is when to sell. We need to quickly look at seller retracements, right? So if I was to pull a Fibonacci on the weekly time frame from the latest swing, what's going on? There we go. Right, from the latest swing high to the close of that swing low down here, you can see that I've been selling, or we've been selling at that, PCP area, 0.38% to 50%, and that the first time there's even a golden retracement is just under this big sell-off here. So where I put that white line, I'm going to delete my Fibonacci. Beautiful videos on Fib retracement trading on the channel. Check them out. But go here on the daily time frame, and I'm looking for that white line that starts off. And actually, I should have just drawn the whole zone. I apologize. Let's just draw the whole zone. Let's just treat this as like a basic training real quick. I'm fresh, man. It's in the morning. It's in the morning. I've got energy. And I shouldn't make the mistake of going on for another 2 hours this morning, because we already have an hour from my first part of the recording. But I am quite excited to just dig into markets, right? So look at this. I'm just drawing how big that golden retracement zone is. So I'm going to make this zone white. Just take the course. It's only $200. My scenario analysis with my account size and how little I risk in the markets gives me about 2.8 to 3,500 US dollars, give or take, per week. If I trade all those assets, if I'm not busy, right, give or take a week. So, anyone who wants to complain about the fees of the course and all that stuff, you're just completely unrealistic. It's absolutely worth it. I've been underpriced for the last 2 years because I'm still building my modules. Right, trading psychology module drops on the 1st. My module 3 is ready. I just feel like people's psychology needs to be sorted out first. So once all 4 modules are up online, all right, we are going to our valued price, because I would rather have 1 or 2 students per month join that we know we're focusing on, right? So, and the only way to get premium prices or premium clients, premium students, or people who are, you know, really going to work on their craft is to charge it correctly, right? No one is going to take a course seriously if it's worth $20. You're just going to forget about those recordings in the back corner. So I would urge you to maximize on using this year and grab this stuff there, because once this officially launches, right, there'll be affiliate programs. I'm done. Like, I'm really done building courses. There's not much, there's nothing more to add, right? You just now have to apply the rules. Right, so I've highlighted this area white so that we can see it on the daily time frame. This is the golden retracement area from the weekly time frame. If you're a registered student, if you're already registered, do not sign up. Don't use the link for trading psychology. Everything is free for students all the time, right? Please don't forget that, right? Any module, once you join now for $200, if I create I want to do a stocks options course next year if there's time, right? You're always going to have access to this stuff, unless if there's an absolute need to whatever. Right, sorry, I digress. Right, so this is the daily time frame. And that white rectangle here is how big that weekly retracement zone is. That's premium selling levels, right? So imagine you have a car and you want this car with all your might and soul. You really want it bad, and then the car was $100, right? And it's your dream car, but then you wake up one day and you find out that there's been a 61% discount on your car, right? So all of a sudden, you now need to pay $39 for the same car. That's what a retracement does. Retracement will either push price up for sellers so they can get the maximum. So in this example, the same market allows you to add a 61% levy on top of the car you want to sell, right? So that's how you view retracement from a business sense, right? So all this white zone here is how big that golden retracement area is. And so we could assume that there might be short-term, more short-term swing sales somewhere there, right? On the daily time frame, you know, I'm just choosing a select few order blocks. There's a big cluster, so I wouldn't want to have a stop loss in between the two. But the truth of the matter is, I would wait for a full weekly retracement. I would absolutely wait. And you can see here, generally speaking, where two worlds meet, right? Where there's a weekly order block and a daily order block, where two worlds meet, you're bound to get a lot of market volume, a lot of market action. Every trader is looking at these levels. Look at this here. You can talk about break of market structure there on the daily. You can talk about some type of resistance level for retail traders. So there's going to be a lot of volume there. So all selling for me on this pair, Euro Swiss franc, should start a little bit higher than where price is right now, right? A little bit higher than where price is right now. Here, sure, like I say, because we're talking about this retracement range, I'm going to delete the fib, right? Definitely, I can see it happening. But you know, premium sells inside that weekly sell zone as well. So you're going to take it as you see it, right? Take profits as markets give you profits, right? Otherwise, this is also a very big possibility, right? It's not my favorite type of demand, but it's got a big enough imbalance. And then one would argue that, Leroy, if you're willing to buy all the way down there, doesn't that mean we can sell down there? For me, not really, because markets, you get triggered in a sell, markets can first distribute inside the zone like this, right? Then boom, stop you out, and then create a liquidity schematic, right? Then create equal lows, right? Boom, then go back up, and then boom, tag the demand, and then go back up there, right? So markets can do anything, right? It's like, it's not our job to have a tail-by-tail track of how markets move. It's our job to understand that markets will always present multiple opportunities, right? Second level thinking, that trading psychology, is to accept that there are thousands of opportunities, but you only need one that meets your rules, right? And so for me, I would ignore the drop, wait for the buy, right? See if the buys work. But honestly, for a swing trader, we want to sell Euro Swiss franc a little bit higher up there. I hope that helps, man. Shake my hand, and I appreciate the calls. You guys ask me anything on the public Telegram group, why do you still have a chance? So I'm making this announcement right now as well. might as well. On the 1st of November, next week, Tuesday, when I go live for Trading Psychology, I am closing for comments the public Telegram group, right? I'm closing it because 60% of the limited time that I have, I devoted to that public group, and it's not fair. I have the most patient, most kind, most understanding students. If I was a 365 student, I would have complained a long time ago. All my attention now will be going to the students, right? And I did announce this in August that at some point in time, I'm going to be going back to building the roots, because next year I want to add more senior traders, right? I've been stuck with 109 six-figure traders for about 6-7 months now. So only added 2 this year, right? And that's fine, right? Everyone at their own pace. And 365 is naturally small in general, but fundamentally it's also because I need to give attention to those in the education groups to start really, productively growing their accounts. And I can't do that with 2 charts. Like, I run a trading floor, I have 12 traders, I have about 10 researchers under me, and I'm opening a trading floor next year in East London. And it's just so I don't want the academy to suffer, but I have to be realistic. I can't keep dancing for the public, right? If you're not going to join us now, that's fine. We've done 84 war rooms, kind of like as a showcase that we actually know what we're doing. So it's now up to you. So on the 1st of November, the public Telegram group, I'm closing that so that people can't comment there, because then I'm always under pressure to go respond there, and then I'm diverting all my time to students. We're going to create a private Discord. It's going to have multiple channels. You're going to see all my intraday trading setups, all my swing trading setups. We're going to do war rooms, so you're going to see my charts there all the time. And I'm going to link you guys to the trading floor. There's going to be a lot of cool stuff happening. So yeah, just a public announcement. There we go. I am done. Right, guys. So I want to talk to you guys about this very important idea of Fed turning points and all sorts of fears in the market, and what drives the market, and understanding that the psychology of yourself is not enough. Psychology of markets in general is also a very crucial thing into moving markets. If the whole market believes that the Fed is going to stop hiking rates in December, for example, as per Wall Street Journal, right? Then you're going to get euphoria in the markets. You're going to get a sense of relief rallies, right? And I've been telling you throughout the whole year, any bear market rally is to be sold. Sell it, right? We have people saying the recession might last until 2024. That's fine. Think about that. That's a short-term target, because I, Leroy, keep telling you as a subscriber on this channel, we are in the lost decade. I repeat, decade. 2020 to 2030 in South Africa, we like to say Ziyakala. It's a mad time, right, for markets. We're going to burn out short-term investors. We're going to burn out a lot of retail capitulation, and it's smart money season. Why? Smart money always outperforms during the driest times in the market. It will compete with each other. We're going to have hedge funds closing. I mean, Ray Dalio just resigned, right? The biggest shark in the game has retired. I mean, of course, the hedge fund will continue, but I feel like there's going to be such a big hole in the market. And, that man has written brilliant books. He must go enjoy his life. But I'm saying, BlackRock is still there. Ray Dalio's hedge fund is still there. These big sharks are literally baiting all these small firms, small banks, and retail, right? So most good money is made now. If you're not investing 10% of your trading profits, I'm telling you, you're always going to spend the rest of your life fighting for money. I did a whole podcast on this, right? And we should get back to that kind of stuff, right? But anyways, so once in a while, the informal mouthpiece of the Fed, which is the Wall Street Journal, will announce a couple of things. And I want to kind of like make this thing very clear. What I'm saying here by informal, I'm not saying FOMC is typing in the Wall Street Journal. I'm simply saying Powell this year, and in general, under Powell's administration, I've noticed, because I track the US economy like a hawk, Powell does not necessarily want to shock the market. He said something weird in March, or he mentioned Paul Volcker's biography. So there's this theory in economics called Paul Volcker, or big rug pull, which was this FOMC chairperson in the 1980s who rug pulled the economy by increasing the interest rates excessively, man. Maybe one day we'll talk about this tomorrow's video when I'm talking about the pound, right? But he pretty much put the interest rate at 20% to fight inflation, crashing the economy, crashing the stocks, blah, blah, blah. But that aggressiveness, right, was named after him. So kind of like Paul Volcker, the markets, right? So Powell, so far, doesn't want to shock the market. I said this in my first take of this war room. He wants to bleed it out. He wants to bleed out the market. He wants to slowly drain the market. Why? Because it is easier to assess damage, right? So if we go 75, 75, 75, pause. Let's take a breather. Market, how bad is the damage? Stock market down 30%. Okay. Is inflation coming down? Is it working? What does the CPI look like? What does the PPI look like? What are the NFP job numbers look like? That's what he's doing. He's draining the process, right? Instead of just going, we're going to go 100 basis point 3 times, right? And then we're fine. He is seeing where the actual critical infrastructure is. And that's his job. I think his job now, moving forward, is going to be politically influenced. I spoke about this somewhere, either in the senior lounge or in the public Telegram group or on YouTube. I don't know. But there's political influence coming to play. Biden is now the president of inflation. That's a problem. Remember how Trump was technically the president of COVID. I'm not saying Trump created COVID or Biden created inflation. I'm saying these guys are the face of this thing. When Obama came in 2008, he was the president of a financial crisis. There was like this big 2007, 2008 financial crisis crash, and they gave the second largest economy, the most powerful army in the world, to a black man, right? So he was the face of that kind of stuff. Now check this out. Big financial crisis, Democrat. Next one, next financial crisis, Democrat. Now, there's a thinking about this, and we don't have time or even enough subscribers to really break this down, right? But there's something going on that I need you to understand. Now, as the political influence grows, I feel like our Powell and the FOMC are going to be compromised. They like to say no, but that's their job, and that's their boss. Even Biden tried to redefine recession this year. I'm not making this stuff up. Right, they literally, it's still today. They are still pushing the narrative that we're not in a recession. Some economists are now saying technical recession, right? Everybody's doing whatever they need to do in their corners. But the markets are sucking up this stuff, and your trades are involved. So you need to understand it real quick, right? So Powell's strategy so far is to bleed out the markets, and that is to make sure he puts it out there, the expectation, right? Because remember, markets price in everything. Module 1 course, market prices everything, prices in everything. You know, price is fractal. We'll talk about fractality later. And what that simply means is the stock market is a future indicator. It's the best indicator of things. And so if there's bad news now, for the future, it will price it in now. We trade that futuristic movement now. So we move with the market now. So markets are pricing in different sentimental factors as they drop. If the biggest sentiment right now drops, so if the sentiment right now drops, which is, look, man, there might be a Fed pivot point in December. Listen to this. If you start seeing these articles, and I'm sure you will, because they're out there, they're really out there. Fed pivot point in December. Or you see an article that says, how else would they phrase it? Rate cut in December. This is going to tell the markets to price in a bullish move to the upside. It's going to tell the markets to slowly but surely start preparing for some relief rallies, because maybe the Fed is done raising rates. Maybe this implies that inflation is under control. The markets will see that as good news, and all of a sudden your NASDAQ will start to have green candles, right? Which is kind of like what happened Thursday, Friday. I'm going somewhere with this, please bear with me. So what I decided to do was to sit down and actually say, this is not new to the markets, right? There's a difference, please analyze, there's a difference between a Fed pivot point and a Fed U-turn. And we're going to look at those examples together right now for about 10 minutes if you'd like. I've already given you lots of money to make on indices. I'm about to break down the currency market if you allow me. So please don't let this retention, don't lose retention on me right now. You know, stay focused with me. Check this out. Now, the Federal Reserve has done this many times in the past. But a lot of market analysts, especially fundamental traders, always misunderstand what a Fed pivot point is, which is what we have right now. So I'll put under Fed pivot point here, I'll put something like this. So the threat of a rate cut. A rate cut means we are going to reduce the number of rates we're making. We're going to reduce the basis point we're making. That's a Fed pivot point. It's like, well, there's going to be a pause and we're going to assess the damage. We're going to see if there's a need to do that. Fed pivot points are always common. Sometimes they are suggested sentimentally, sometimes the Fed will announce it. A Fed U-turn is a completely different thing altogether. When we talk about Fed U-turn, I want to use the word bail out. This is literally the FOMC / the Fed coming to save the markets, and there is no better way to put it. They are literally going to put money, not put, let's use the correct word. They are going to print money to save the markets. They will not let the markets fall. There's a certain amount of pain that becomes so disastrous to the economy that the Fed will come bail out the market. A Fed pivot point is we're most likely still, going to continue with doing rate hikes, but we're going to reduce the rate hike. We're going to skip a meeting. We know it's something along those lines. Those differences are very distinct, and their impact is very distinct. So you must understand it, right? Because I suspect there's going to be confusion this December, November, December. We've got midterm elections in America right now in December. We've got the influence of these people. So it's absolutely important to get this right. So what I did was my trading strategy, by the way, supply and demand, the way I was actually taught it more in line with crises than bull markets. I think everyone is a genius, during a bull market. Right, so you really want a strategy that can make you money when things hit the fan. Right, so I went back to test a couple of crises. I wanted to go back as far as the last top 10, and I decided to stop at 1973 recession. And the reason for that is we assume at 365, we assume, right? We cannot say with certainty, but we assume at 365 we are going to have a recession as bad as the one in 1973 or even worse, okay? When I'm looking at these crises and I'm looking for similarities, right, I literally don't think it's gonna be as short and quick and sharp like the 2008, 2007 crisis, the financial crisis that we just had. I don't think it's gonna be just a big bubble explosion like the dot-com bubble of December 2000. When I'm looking at the factors that are being included in making up this recession, it's looking a lot more like the 1973 recession. That's just my humble opinion. Right, so check this out. These are the number of times, and unfortunately it doesn't come out so nicely, man, on the whiteboard, right? But these are the number of times the Fed has had pivot points. Remember the distinction. A pivot point is when the Fed cuts rates in the economic cycle. They don't stop rate hikes, they start to reduce them. They change their language. They start to say, yeah, maybe it's working. Look, inflation was 9.1, now it's 8.2. Instead of giving you 75 basis points, we're going to give you 50. Maybe it's working. That's a pivot point. The Fed pivots, right? Makes a slight adjustment to their policy, and that sends a sentiment markets price that in. We trade that, so we must understand it right now. But what I've done here is very, or what I found rather was very interesting, right? Because I'm looking at these big crises about, that's not going to work, never mind. I'm looking at these big crises and I'm trying to understand what happens. What happens every time the Fed pivots, right? How does the market react? Is it always just buy? and how long did this buys last? So what I found out, and we're gonna maybe we're gonna use the S&P 500 as an example. I said it in my earlier take, by the S&P 500 is just globally a good health check to the market. So you don't have to, if you want to see how the overall stock market is doing, S&P 500 is the best to kind of like have a look at. Now, the great financial crisis, okay, we know this one, the 2008 crisis. Most of us were very much alive and functioning adults. If I look at the demographics of the people watch my videos, between the ages of 30 to 45. So definitely in 2008, you were kind of like aware of what's going on in the world. And you remember there was a crazy bank crisis, a housing marketing crisis. Now, the Fed starts in August 2007 to pivot. So you can imagine the Fed starts to, first they deny the crisis, like that's what, there isn't a recession, it's not a real thing, blah, 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 blah. They lie. There's tons of headlines. There's the Big Shot documentary. There's all sorts of evidence that everybody was just aloof to this whole thing, okay? Cool. And then eventually when they start to kind of like grapple with the situation, they go crazy, they go ham. Just focus on me, not on the whiteboard. We're gonna move through that together. Now, during that crisis, right, when the Fed starts to intervene, there is a pivot that starts in August 2007, right? But markets only find a bottom in February of 2009. Listen to what I'm saying. I'm saying the markets are crashing. This is profound stuff, man. It's so important. The markets are crashing. The Fed then starts to pivot, slows down with the race, feels like, okay, we've done enough. There's a pivot. And then I'm saying to you that every time there is a Fed pivot, every time there is a Fed pivot, historically speaking, markets dump even more after each pivot. A pivot to me then becomes a short-term relief rally. That's why I've been so profitable and very quick to announce bear market rally, sell it, just sell it. Because every time the Fed pivots, there's a pivot now, a sentimental pivot, that maybe in December we're going to cut rates. So markets are running now. I don't know how long the run goes. I don't care how long the run goes. My money is with the drop, because the drop is in line with the trend. One, the drop is in line with the sentiment. Two, the drop is in line with the fact that supplies are dominating demand all the time in this crisis, right? So the pivot starts in August, but markets, it took 18 months for markets to find a bottom on the S&P 500. So there was a further negative 50% drop after the Fed pivoted, right? Dot-com bubble, when IBM, Microsoft, it was like the big tech decade, like when people were just discovering the internet and all sorts of things, right? Every time there's a big rise, remember COVID 2020, Fed printed a lot of money, big rise in the markets, big bubble, poof, a crisis later on, like where we are now. Same thing, 1999, 1998, 2000, massive tech stocks rallied like crazy, okay? It was candy, all right? Boom, dot-com bubble. Now, the dot-com bubble, again, the pivot starts in December of 2000, right? There is this, then a Fed pivot, and then the bottom only happens 2 years later. So even after the pivot, markets fell another minus 38%, and the bottom was only found 20 months later. 18 months, 21 months, okay? Let's find another crisis, right? The Gulf War recession. This was now me back in history class. I remember this very well. Wars create recession. Yesterday, America and NATO announced that they are testing, they are doing fly drills. Literally, there's literally a picture of a jet fighter dropping empty nuclear heads. They're doing fly drills as a practice run in case they need to counter threat Russia. Russia still in war with Ukraine. NATO is slowly starting to show its teeth, right? So a war markets have actually, inflation has been one of the main catalysts this year has been war. Now the Gulf War recession, the pivot started in 1989. The bottom is only found in 1990, right? 2 months before I'm born. And during that, to find that bottom, stocks crashed a further minus 4.1%. Remember, guys, whenever these pivots happen, markets have already been falling. So there's a 20 to 30% drop in the markets already. Fed is trying to save the drop, save inflation, fix things already. And then a pivot happens here, and was saying after a pivot, more damage comes, right? 16 months to a bottom. The double dip recession, right, of 1981. I don't know anyone who's paying attention to banks thinking 3 years, more take profit in 1 year, in a 10-year plan. Look at the gap between these financial crises. There is one that starts in 2007 to 2008, and the bottom is only found in February of 2009. Before that, there was a crisis 9 years ago, 10-year plan. 9 years ago, the dot-com bubble that starts in 1999, 10 years ago, and the pivot starts in December of 2000, right? And the bottom is found in about early 2002, fine. Before 2002 bottom, or the pivot that starts in 2000, 10 years ago, was the Gulf War crisis in October 1990. This stuff is in my course. This is crazy. I get crazy excited about this because if I can see it, I can make money out of it, right? If my trading strategy acknowledges these waves and I understand why, money in the bank. I'm going to calm down, but it's in the morning. I'm going to calm down, right? So in 1990, 10 years, right? Literally 10 years before all of this, or just before 8-9 years, there is a double dip recession that starts in 1981. The bottom is in 1982. Stocks fell a further 16% to get to that bottom. So it took 13 months of more selling. All right. Woo, another almost 9 to 10 years before this of 1981, right, is the recession, the big recession. This was called the golden age of capitalism. There's a guy called Henry Ford, who's a Freemason. I don't know if you care about that, but if you do, if you think about Napoleon Hill, Andrew Carnegie, that's the generation that Napoleon Hill is studying when he writes Think and Grow Rich. A lot of cool information about that stuff alone that we're going to do in the podcast. Now, Ford doesn't just create a car. Ladies and gentlemen, when I lecture at Rhodes University and I'm teaching my second year's industrial economic sociology, it's not just about the car. He creates a new mode of regulation in capitalism, and he creates a new means of accumulation. He literally redefines society with that car. He creates a middle class that can afford a vehicle, number one, and a lifestyle that comes with it. Ford paid his workers a lot of money for working crazy hours, so he creates this shift into what we call global mass production. By the time the Japanese come, we call that post-Fordism, because the Japanese create lean production or just-in-time production. So what Ford did was really crazy. He redefined capital, right? So anyways, after that golden age of capitalism, the 60s and the 70s, where everybody has money and consumerism is going crazy. And if you want to create a direct link, if you're in South Africa, we're talking about apartheid South Africa. So in South Africa, we've got what is called racial Fordism. Why? We've got mass production, but only a small group of people can consume, because the only people with economic control was a small group called white people in South Africa, right? This is just social economic history. If you don't want, just skip me. Now, that meant that the majority of the nation, South Africa, where black people couldn't consume, couldn't buy VWs, couldn't buy cars, couldn't buy land, couldn't buy homes. And so what happens is, when you have an economic system like that, it's going to implode, all right? I'm not trying to be controversial. Mandela comes in too late to save South Africa. In fact, it doesn't even save South Africa. The people on the ground, the masses do. But economically speaking, apartheid could not sustain themselves. You're going to read my PhD. It's going to be a book. My PhD is based on the 1980s and the economic hub of the 1980s. So I'm not talking out of my ass. I really know what I'm saying here. So the golden age of capitalism ends in the 1970s. There's a crazy lady in Britain. Her name is Margaret Thatcher. She says there is no alternative. She starts to crush the unions and the workers, and they usher in neoliberalism. Markets go crazy. Equals recession. 1973 recession starts then, right? So the whole world starts to fall apart because they can't sustain this mode of regulation of capital, including markets. Now, the recession of the 1973, the pivot of the Fed then starts in October 1973. The bottom is felt roughly a year later, Stocks crashed a further 40%. This is what pivots do. This for you, my brother and sister, is for all of you rushing in buys blindly. Be careful. Right. Now, real quick, because I know I went too excited and I wasted a lot of time, I want to then explain the difference with Fed bailouts. Leroy, the person who's been consistent in giving you 91% accurate trading signals for free on this channel, is telling you that I'm buying like a crazy fool when there is a Fed U-turn, when there is a Fed bailout. I'm not buying at pivot points. I am buying at bailouts. Why? Bailouts are more than Fed cut rates. A bailout is different. A bailout is Powell saying what he said in March of 2020. We're going to go save the markets now. COVID has killed us. The economies need to reopen. People need money. Put money in their mailbox. That's literally what Powell did 2 years ago. Are you unemployed? It's fine. I'm going to pay you $600 per week. I'm going to give you $1,200 per month or per week, whatever it was. I'm going to put on the money printer, and you're going to get money. Right. And we're also going to buy those dips, those real manufactured dips in the markets. When we saw that in 2020, I've shown you guys the charts many times, the bottoms of March 2020. And I said, I think price has to come back down there. I said it's in January. Look at where we're going. Look at your NASDAQ. Look at your S&P 500. There is sufficient demand in the buys of March of 2020. Now, a bailout is that. It's more than a rate cut. It's when the Fed comes into support in the market. So just like what we did before, I pulled out 5 big examples. I went from the bottom to the top this time. In 1987, there was something called Black Monday. Go Google that stuff, man. Black Monday, the stock market fell 20% on one day. Can you imagine that? We've been waiting for the S&P 500 to breach 20% into bearish territory for like 6 months this year. It literally happened in one day. Fed bailout. Fed was like, we are not going to let the American dream, the stock market crash. Fed bailout. They just bought everything, bought it. 2020, I told everybody, open 0,1, 0,2, 0,10, standard lot size. I don't care. This was one of the only trades you could trade without a stop loss. In 2020, oil went to negative numbers. I said, buy and hold oil to $100 per barrel. Did oil get to $100 per barrel? It did. Did you make anyone could have become a millionaire off that trade? Bailouts. In 2003, again, Fed bailed out the markets. The big crisis, the 2008, after the pivot point, and then the crash happened, and then markets dropped after the pivot point. In February 2009, when the bottom happened, it was a Fed bailout. Remember we spoke about how there was a pivot point first in the 2007 crash. The bottom was because the markets had fallen enough, and the Fed was like, we're supporting the market. The crisis of December 2018, go check out NASDAQ on that, Fed bailout. But everybody should be clear with this one. March of 2020 COVID, Fed bailout. Markets are only going to go back to all-time highs when the Fed U-turns, completely does away with monetary policy tightening, reopens the printing machine, and trust me, they will. Democrats will open the printing machine. Democrats buy votes all the time. All the time. Your Obama, your Kamala Harris, your Biden. I don't support Republicans. I think all politics is garbage, personally, right? But I'm simply saying the U-turn will happen during Fed bailout. So that's something I hope has helped you, something I pray you understand. And time will tell if I'm right or wrong, but historically speaking, this has happened so many times, right? It's now almost impossible to be wrong about it, and it's going to happen, I guarantee. Right, excuse me. Right, so we've done this big part that I wanted to kind of look into. So I think the best thing for me to do now is to calm down, and then quickly look at some currencies for the war room. I don't want this war room to be too long, man, but if you recall, in my original plan for the day, we were going to look at a couple of things. So let's look at our dollar. Look at the DXY. The DXY this week to me seemed like it was struggling. In fact, in terms of scenario analysis, I only had one sell, by the way, this week on EURUSD. I mean, I traded other assets, but I only had one sell. EURUSD, it was like for $100. It wasn't anything that deep. And then all of a sudden, you start to actually pick up change of character on the smaller time frames. Anyways, if I pull out my EURUSD scenario analysis chart, I can show you. I know I marked it somewhere. It's like I know it was a stupid sell, man. It was like $100 or something. But it was good. Money is money. It compounds, it grows. You respect it, it respects you. But I'm simply saying it was very difficult to be a day trader seller like I am a continuous swing trader seller, because the dollar was actually going through a retracement. When the dollar is falling, these risky assets go up. And I've just explained to you why these risky assets are going up, because there was a Fed pivot point, right? Right. So yeah, there it is there. So this was on Wednesday. On Wednesday, I had a quick short trade. And it was literally by luck. It was impulsive when we talk about these things. And so it's literally, I just made money because I happened to be right, not that I planned to be right. And that's dangerous trading, right? So even me, I'm not even part of that stuff. But I saw it breaking off in pattern, and I saw it retest, and then I just took the trade because I assumed markets are going to continue falling that day. But you can see that sometimes that doesn't always happen. For example, breaking off in pattern here, right? And then you start to sell, then whoop, on the same day, markets, do disaster on you, right? But look at this. This is interesting, right? Look at this pattern. One green candle, red, two red candles, then price comes back. We saw this on the indices. Price is fractal. Fractality is eternal in price, right? If you understand it, it was Wyckoff. Wyckoff said, just imagine that markets are controlled by the composite man, just one man. Smart money thinks the same. And you will see their psychological imprints across the chart. You only have to come to my trading psychology course on the 1st of November to really understand this stuff. It's a beautiful thing, right? So I don't even think this will work. I don't even think this will work. I wrote short-term sell here, and I feel like short-term has already happened. I don't know if it will work, but we shall see. So I didn't have much in terms of scenario analysis, because I like to day trade in line with my swings, by the way. Yeah, there'll be change of characters, and I can buy here and there, and I'll do that if I want to create content. But for me, it's like, why not when I can just, make easier money following the trend, right? So I digress though. DXY, we saw multiple retracements. I'm going to be very fast now, just so that we can control, the depth of this volume. And you can see here, Friday was a crazy sell-off day for the dollar. Thursday, similar structures. So yeah, the dollar has been struggling a bit. But we spoke about why, right? It would be in a supply. We assume the supply will eventually be broken, right? But until then, price got to do what it does. It's got to do what it does, right? So we've got, this is the daily time frame. We do have, this is quite interesting. When last did we see this in the dollar, right? This is, a very interesting distribution schematic. Like every time price gets to a supply, markets will just create a PCP to the upside, break it, retest, and fly, right? And we've seen this many times. There's a supply, PCP to the downside, fly, right? Many times. On the other side of this red thing is daily supplies. That's why it's red. You can see markets make contact, PCP, a little bit of a drop, upside, big drop to good demands, then they fly. But this is good distribution, right? More than just a PCP, breaking off in pattern acknowledged, breaking off in pattern acknowledged, equal highs created, so to speak. So just be careful about this. I would assume that the dollar is going to wait for a report. I would assume that we are waiting for something here, right? But for me, I'm chilled. If you didn't catch this buy, or you're still holding, I'd scale out of it. Number one. Number two, if you took profits like me a long time ago, then we're just waiting. I'm really waiting to see clear buys. I would like clear buys on the dollar. And until then, I don't assume our swing trends will resume, right? In fact, if you're still watching this video now, you'll know in the earlier part I said, watch out, 28 October. It's crazy now. when your trading strategy can actually pinpoint exact dates. I think so. I think 28th October will be a reckoning day for the markets, which is this coming Friday. That's my humble opinion. I think we'll either get crazy rallies, right? So that confirmation of the pivot turn, and markets just gonna run crazy, or we're gonna get that boom continuation to the downside, right? And it also just depends on what type of a data type of week this is. What type of a data filled week this is. I just want to see if there's anything big to look out for. We've got a lot of PMI reports, you know, manufacturing data. It's kind of important. Euro, pound, you know, but on the dollar, yeah, consumer confidence. But this hasn't really been moving the markets that much this year, right? Australian, you know, CPI QQ quarterly, but obviously, man, 2 a.m. CAD monetary policy report. We're going to get a CAD rate hike, right? Check your oil, check your CAD. You'll see where price is going. I've told you that stuff. ECB press conference, and this is Friday. BOJ monetary outlook. All right. So, man. All right. So maybe in the middle of the week, I'm going to have to come through because we need to keep track of the Japanese yen pairs. We absolutely do. We did a lot of them last week. I mean, a lot of those swings right now. So we might need to kind of like have a you know, a look, right? Then on Friday we're gonna have the core PCE price index, which is something that Powell has said many times that, you know, that's something that they would like to take more seriously than CPI sometimes, right? Purchase goods, and why? Because remember, this is looking at inflation minus inflationary things like food and energy, gas, fuel, oil, all those things. It looks at just goods and services by consumers minus the things that make inflation jump. And because Powell can go, well, look, I mean, we can blame food and energy due to the war, but inflation across food and shelter and other services is going down, you know. So look, watch out for that weak argument. But this will be on Friday, right? So outside of that, I don't see anything too crazy, right? But I promise you, Friday is going to be a good rocking day for the markets in terms of direction, personally, right? And we're going to hear BOJ. I told you guys that these guys become important to us from October. So now when the Bank of Japan releases a press report, when the Bank of Japan is making an interest rate hike, we need to pay attention. The markets have been lopsided the whole year because BOJ was like, it's fine. We're not going to tax the yen. We want a weak yen. We need to know if that's still the plan, because if we still have a weak yen, USD/JPY buys are go, EURO/JPY buys are go. Like all those monetary policy divergency plays are a go. But if BOJ, now that we're in October, November, starts to make a turn, which I suspected they might towards the end of the year, then we're going to get a new supply and demand equation that we need to look out for, right? But apart from that, nothing too crazy, right? So I'll keep you updated during the week, I promise. But yeah, join our public Telegram group. Even though I'm going to close it for people to comment, I'm still going to use it to drop information, charts, education stuff. I just thought it will be now at my time, not always being, I haven't answered someone, or, you know, I really want the education group to feel my presence, so to speak, right? So, but I'm not going to just delete that group, the public Telegram group. It will still be useful Telegram channel to have, right? Right, so we've got an interesting outlook on the dollar, right? If this was to play out, for example, this green area of value there, the white area of value is just smaller time frame reads, maybe an H4 demand that's fresh. And you can see prices slowly but surely clearing, right? And guys, if this stuff is not clear to you, play around, man. Look at the line chart, right? Don't trade line chart, just look at it, right? And what I like about the line chart is these little sharp turns are not the wicks, right? Let me show you something cool. The little sharp turns, if you understand candlestick language, you understand how candlesticks close, the body where candlesticks open and close. Those little sharp wicks here are actually the close, not the wicks. If I pull out a candlestick, check that out. You see that? It literally discounts the wicks, right? This is pure data. Have a look. So you want to see what's the trend, what's going on here, right? I mean, I'm starting to see some interesting things here on the dollar, right? So if I was to pull out a brush, I could make this argument. Okay, well, this is a low, this is a high, this is a lower high, this is a lower low, this is a lower high, and then we've got an equal high. right? So all we need now is for a new lower low to make the assumption that we might continue to the downside, right? So it just do whatever it takes for you to see this thing clearly. Remove the glasses, remove the matrix, and see clearly what's going on, right? Akinihashi shows us even clearer for me anyways, the volume of price, right? And you can see that there's nothing, unless you're a support and resistance trader, then of course you're clutching at straws here, right? If you're a support and resistance trader, there's something, there's always something. Support and resistance trader see something everywhere is something, right? But if you're not into that nonsense, and no disrespect, but I'm not going to waste my money on stuff that doesn't work. If you want support and resistance, go to Baby Pips. It's free. There are 138 lessons, 700 indicators, 300 chart patterns, 0 profitability, a lot of good market information. But if you want to make money, take me seriously. I'm telling you right now, you're just going to see stuff that doesn't really help you, right? But you've got something like this, right? And according to my volume indicators, Akinihashi, we can expect a drop. Why? Because the question is, where's price going? That's the question, number one. Number two, what's stopping price from falling further? Can you tell me if you see anything there stopping price from falling further? On the daily time frame, I can't, right? And so it makes sense why markets stop there, because I can see that there are order blocks at play, right? So there's one here that Akinihashi is showing us, but it's an H4 area of value, and I really don't trust it, right? And the last thing that I'll do on the dollar, so I don't waste too much time, is to find a buyer's retracement. Why? Because the trend hasn't broken, right? So we're still looking for buys. I'm going to look at the latest swing low to the latest swing high, and then after that, if I'm confused, I'm just going to use the original swing high there. But I can tell that my golden ratio is here. My golden ratio of my discount for buyers who want to buy, the market will always buy low. So they're looking at 61 retracement, a discount in price. And if I'm not mistaken, where I've just drawn this thing here, where does my golden ratio or discount? If I'm not mistaken, my Akinihashi H4 time frame indicated that, maybe it will drop, right? Somewhere here. Remember, this is the same zone I've just played around. You see there? There it is there, right? So somewhere inside our discount area, there's a possibility that buyers might start to react to this area, right? So dealer's choice. I like the daily a lot, and I like H4. So I can have a mini lot size here, something small, something just to keep me in the game. But I've already used this as a fresh touch. We closed, obviously we got into supply. So I definitely have another pin in order here on this one. I can tell you that for a fact, because I'm open for a retracement to that zone. I definitely have one here, all right? And at some point, you might have to even update our long-term trend line. All right, so this is an internal trend line within the trend line from April. So markets, and guys, if you only knew how deep scenario analysis is, the stuff that I did on YouTube, those 8 videos, were just to make sure people are making money, right? But there's a lot to do with scenario analysis, especially with trend line, right? If you're that student who is interested, you look at stuff and you ask yourself the question, what did Alvin say? Go back test it. Go back test the stuff there, right? This is simply a ghost feed. A ghost feed goes, oh, okay, so there's a probability that markets kind of like to repeat this process. Right, there we go. So I'm repeating this loop into the trend line. Markets took off there. That's fine. I take it back now to the next one. Why? You couldn't even pay me enough for this, guys. Watch this. I'm helping you here. The distance between this to that is now this to that, right? I did a duplication ghost feed in front of you, right? This is literally, the only thing that's not live is this video, but otherwise I'm recording it as I go. No edits in between, I'm just going for it. So this is what we did. And now I'm just moving it per every single touch on the trend line. Why is it that so far, price is in equal length? So far, price is in equal length, as in I can almost determine that if I open a buy, how far I'll get. How is this possible? Order block to order block. into this order block, supply there. A market's random, bro. Come on, man. Like, you know, some of you, and no offense, you're broke because you don't want to pay $100 for a course. That's why you're broke. You're not broke because of a demon or a devil, or that you're destined to be broke forever. So you just refuse it. I'm just dragging my ghost feet across different demands, perfect accumulation, and then this is the last one here. Well, there was that there, but anyways, this is the last one there, right? This is where we are now today. Now, I want to zoom into where we are now at the market phase that we're in right now with our ghost feed. And our ghost feed tells us that price was always going to come again into an area that we articulate as a demand and rally into an area we call a supply. And that's what price did. Yes, markets created a stronger supply, blah, 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 blah. But we now need to see a little bit of movement to the downside. And that's why I'm saying to you, I have got a couple of pinning orders here, and I've got another one there. And I don't mind putting a micro one now at that H4 level, right? Because when the dollar moves, it will move. It's dollar season, right? But anyways, I hope all of this stuff has helped you people. I love and appreciate all of you, but I now need to fly through a couple of currencies. So no more teaching. EURUSD is the next one, because now we understand that the dollar has to fall a little bit more. Anyways, my opinion, right? We should expect to see a strong euro, right? So this is swing trade number 11 on the euro. So like, what? Number 11? What? How is that possible? I tell you this stuff all the time. I remember it's still here. Oh, it's 12. It's 12. Show me a strategy where you can back test this and find the stop loss hit. $200. The course is and ask registered students how many people I add into the private Telegram. I haven't added anyone in a while. I've forgotten to add people. Like there are 5 people who just joined recently, but we don't get students every month, so I don't live off courses, unfortunately or fortunately, however you guys view this industry. The markets are sufficient, but this is time that you need to spend to see this for yourself. Right, so we did this chart a long time ago when I kept saying that there's going to be a breakout structure. I've done something very similar with Bitcoin, where I've told you that because of what price is doing all year, this is where price is going, right? You know, some of you are looking at your portfolio. Your portfolio is on fire. Are you swing selling? Are you selling crypto on the spot exchange? Because that's called hedging. Not only are you hedging, but you're making extra money to keep buying price at this low cost, because it's not going to be down forever. But yeah, sure, I don't know. I get 20 likes, so sometimes I feel like people not hearing me. You know, please like the video so I know that we are all on the same page. Right, but anyways, this is where we are with EURUSD. Right, markets have made into, you know, a much more recent supply. It doesn't look like it's going to survive, only because of the dollar, right? The dollar does keep falling and we actually get those tags, those lower buys, then yeah, kiss the supply goodbye. Then we have the option to go module 1, and I think we should, but we should do what Mark Douglas says. He says, accept the risks. Once you truly accept the risk, no fear, no FOMO, you operate good risk management. You take the L's, you take the profits, you average, you are moneyed, right? Moneyed, right? Which means to me, I'm going to go here and I'm going to have a pinning order there, right? There's a high chance that I might not get it, but given my rules, I should be allowed for a retest. Given my rules, a retest is still safe for a play. If it's not safe, then I'm looking for a better supply. But for now, this is the target. I need supply 1 and supply 2 to get taken out before I change my perception of the market. So I'm going to try and sell again, right? So if markets go any, like maybe 10, 15 more pips above here, then my last EURUSD swing sell is going to be, I'm going to get kicked out with the little profits that I have, because I was still holding this thing when it came down, and I was hoping for a deeper retracement, and markets are bouncing up and down, right? So that's all I have to say about EURUSD. I will resell again up here, and if that doesn't work, I'll start to target better swings. We'll talk about them as markets present those opportunities. Next asset, pound USD. I need to fly, guys. I've spent so much time recording. I apologize for the length of the video. I'm so sorry for taking so much time to give you guys great education and free money. I know you want the 10-minute videos. I apologize. But pound USD, When this baby falls, she's going to fall like a rock, right? If you try to throw a rock in a river, you see how it sinks, right? So same rules apply with the dollar. We just have to wait and see. Now we've got the situation here. We've got a better supply there. So if I do this like this for you to see quickly, and then I do something like that, then that's better to wait for. But there's a higher supply above, so you're gonna have to swallow this whole zone for a swing. I repeat, you're gonna have to swallow this whole zone for a swing. But now I like it. I want to see it as markets climb up. As markets climb up, I'll be attacking on intraday, right? Waiting for the drop, right? So please have that. Remember, we've got swings charts here. Excuse me, and then we've got our day charts organized there, right? Someone used to say, my people know me, or you shall know them by their fruits. You shall know them by their fruits. If you're a 365 trader, I truly expect that every time you click on Pound USD, you've got Pound USD on a different broker for swing setups, and you've got Pound USD for your intraday time frame on the 1 hour chart, and you're just waiting patiently for the right opportunity. Some of these 1 hour sells become the best swing trades of your life. So that's Pound USD. Next one is NZDUSD. I just quickly pulled up the core stuff, right? Because remember, I've been doing my day trader series in these war rooms. Look at that, violence upon violence, right? Very strong NZDUSD, really trying to survive now that dollar is falling, right? But yeah, here, comrades, I'm holding. I really am. And if I'm not mistaken, I can open my live account right now, but I'm pretty sure I've logged profits just above here, maybe something like that. And we've got a lot of good things on this chart. This chart, we've got a lot of good things working for patient folk, because this could just end it all, right? This could literally put an end to the retracement. And if it doesn't, then we can rely on this guy. And if it doesn't, then we can then talk about exiting the trade. But there's been a beautiful drop, right? So if I look at the ultimate, what the hell is that, right? If I look at the ultimate retracement zone, and I'm talking from a seller's perspective, you can't be like, what's going on here? What's going on here is I told you to get into this trade, right? I literally did. Just go to the war rooms, right? So golden ratio area retracement is here. That's why I'm saying this. And with me, generally speaking, because of risk allocation, and it's very difficult to blow an account with good risk management, there is a very high chance that even on that live account, I'll check for you and confirm, but even on that live account as we speak right now, I'm pretty sure there is a new pending order here. As in, I don't just hold previous original swings, I start to compound, I start to create more income, right? So when markets retrace, I'll have my original sell, and I'm hoping to sell again there. And knowing me, I'll most likely have a lower lot size here, just in case markets stop there and they retrace going down. Because if that's golden ratio, this is 50%, it's still good enough, right? But NZDUSD, I got nothing to tell you, right? If this area breaks, move up. So again, if the dollar keeps falling to those demands, then we can expect this, right? Let's quickly try something that I haven't done in a long time. Let's quickly try something real quick. So I'm calculating the percentage points. Just man, the day I release module 3, it's over. That's 2.89%. There's 2.89% or 166 pips for price to get to supply 1. There is then supply 2. Roughly, it's a 5% increase in price or 309 pips. Right. So just remind me, or never mind, you're not live. So I'll write this down. I'm gonna call the first one, let's just call it 3%. The first one, it's a 3% move to the upside for me to get to the supply. And the second supply, the golden retracement supply, it's a 5-point-something%, right? Now let's go to the dollar. Let's quickly see if there's, and if there isn't, right? But you'd be surprised. You would be surprised sometimes. But I'm gonna go to the DXY. First of all, we are on the daily time frame on NZDUSD. So I'm gonna go to the DXY. I'm going to go to the DXY. Right, there we go on the DXY. There we go. So these green zones are daily demands, right? These are daily demand zones, the green zone. The white zones are H4 demand, the demands inside the day. So from where price is on Friday to the first green zone is, hello, 1,50, right? Roughly 1,50 pips. And if you look very carefully inside this green zone, the lowest demand is this white zone here. So inside the first green zone is the H4 demand. See, I want to show you because you're going to be like, nah, he's making it up. You see that there? There's this value-based rally right inside the first green zone. I'm going to go to the daily time frame, but I can do it on H4. So this H4 inside the first green zone is right over there. If I was to drag my info thing, I'm going to get about 2,225, right? And I know in NZDUSD to get to the first supply is almost 3%, 2,9 something, 3%, whatever, to the first supply. To get to the second supply of NZDUSD is 5%. It's a 5% move. From where price is on Friday on the DXY to get to the second demand, right? To get to the second lower demand is a just under 3%, give or take. And to get to the true demand, the H4 within the daily demand, if I was to just extend this white order block, I'm pretty sure it's drawn correctly, is about a 3% move. Did you get this? So if DXY drops just another 3 to almost 4%, 3,625, 3 to 4%, NZDUSD will have moved up just about 5% to get to that golden Fibonacci retracement. And if the buy orders rock here, what do you think is going to happen with the dollar? Dollar shoots up, NZDUSD falls down. Man, you can't say I didn't try, bro. Like, and this December I'm taking a break. A 30 holiday this December. I am tired, so there will be no teaching in December. So please maximize on me now. Right, AUDUSD. Golden fib ratio is already marked out here, so please quickly observe my chart. Not much to say. This is white. White means for me, ish, could work, could not work. You know, give or take, we shall see. Type of situation, right? It's one of those areas that are most likely just to let go and rather back test. Why? You don't want to sell at the end of the tail. You really never want to be that guy, right? Sell at the end of the tail close to a demand. It doesn't always work out, even though the overall forecast is bearish, right? In fact, the thing is just stuck, right? So if you check on the weekly time frame, this golden retracement makes a lot of sense. That's where the weekly supply is nested. Let's wait for that, right? For the disciplined people. Otherwise, this is a cowboy area. You could make money, you could not. I'm chilled. You want to buy up, you know, you understand, accept the risks, and you move. I have Ethereum here on my list, but I want to quickly talk to you guys about Bitcoin. I did a video on Bitcoin. It had terrible views. That's fine. There's nothing to talk about Bitcoin. I understand. We've been through it, right? This is going to happen. Despite all the new bullish news about Bitcoin, I don't see this ending well for anyone with a short-term perspective. I want Bitcoin to remove this area. I want us clear of 17,000. I want us clear of 16,000. This is my prayer, and I'm going to keep holding my sales on Binance and FTX. In fact, on Binance, I'm going to stop trading on Binance very soon. I'm going to explain why, and I'm going to start a program called Back to the Future with crypto if you want. It's just going to be purely signal service every single day. When I was looking at my trading journal, I actually make a whole lot more money day trading crypto than Forex. So why not? Right. So if you're interested in that, please comment. Actually, can I please see anyone? Does anyone want me to start a private Telegram signal service group? I wrote the idea here. So if you, it's like raw footage, right? Sometimes I read something and I'm like, why can't I do that for people, right? So let's see. Just give me. This is Napoleon Hill Selling You. It's a brilliant old book where these editors put together a couple of things, right? So I first of all, I thought the name was crazy, right? So it's gonna be called. I'm not making this up. I wrote it down. I just started scribbling on this book. This book has nothing to do with the markets, but it triggered something. Right, so I'll be giving out trade alerts. They will be a weekly seminar once a week. So the war rooms on crypto, but it'll be private, right? So it'll just be for those people who join. Students and public, everyone has to kind of like pay a subscription for it because it's a signal service, and it's going to be silly. It's going to be like $15, $15 per month. for students. If you register students, $15, literally $15 per month. If you want, I guarantee you'll have 300, 400 bucks by the end of the month if you've got a small account in crypto. And for non-students, we're not at 365 students, it'll be like $30 per month. So yeah, you get trade alerts. You get me doing a war room like this on crypto, probably on Fridays, like via Zoom. So it will be live. The war rooms for this will be live because they're not going to go on YouTube. So it'll be like a live class. That's why trading psychology is only Tuesday, Wednesday, Thursday. And then I've been back testing FTX. If you listen to the FTX story, Sam the billionaire, that story is profound, right? Anyways, so you'll get all my back tests. I've back tested over 300 spot exchange crypto projects. So you can get those videos as well. Create a private YouTube channel for that stuff, so you can actually learn. So if you want that kind of stuff, yeah, you let me know in the comment section, and I can start it. If not, I'll just keep trading crypto. But yeah, so Bitcoin, guys, this is the chart for Bitcoin, and I think there's just clarity, right? If we do break, there's a lot of big people, big YouTubers, big people with Instagram followers, people with predominant bigger influence that I might ever reach are looking for a breakout here. It's crazy, like it's really crazy. Like we all see the same thing. They're looking for a crazy breakout and they're looking for a move, right? At least back to 28,000, and this is like real stuff, right? So if that breakout does happen, be very careful, right? I'm looking at the supply and I'm thinking, that could be nice. 1 hour supply, here's what dropped us, right? If markets do break out of this trend line, I'm going to have to close this 1 hour sell that I took that I'm still holding, and then just hold the long-term swing. I don't have a problem with the long-term swing. With this 1 hour supply here, I'd rather just take that money. But I suspect the supply is not going to break easily or at all, right? And if it does break, the moon gang, needs to kind of like tell you that there's also a big problem at 24K. And anyways, long story short, there's a lot of pressure to the downside. But quickly pause. Have a look at Bitcoin right now with me. Okay. Now check the Ethereum chart. Look how different Ethereum is. Again, one more time. Because you have to do the stuff. You have to see the stuff. Pause. Look at this cluster. Look at these levels. Look at this what's it called? A range, some Talitha pattern. All right, look at this continuously teasing retail traders with the support and resistance nonsense and moving closer and closer to the choke on Bitcoin. Now look at Ethereum. Ethereum to me is like this bougie lady who don't play with the peasants. This is a chart to watch for, and it's been so nice to trade. Ethereum has been so much more nicer to trade until recently when we got stuck here. So this is that Bitcoin range, right? This is what it looks like in Ethereum. And if you look at Ethereum, look at the structure. I drew like a quick triangle for you. Check this out. So the reason why I need to take profits just here, literally at my TP somewhere here, right? And I got literally, by God's grace, like TP hit, and now I'm just waiting to get in again, is I always tell you guys with the triangles, always draw the base of the triangle, and that's your take profit target. You always get a good 1:3, right? So at the base of it all, right? You see that info line? Now that info line is equal to where I marked yellow. And if you look at price carefully, there was just a random day where markets just shot down to that level. Mwah, beautiful, right? So that was just a clean trade. And if you think about it, if you from the base there to that broken down pattern, that's really nice. Now, Ethereum needs to make up its mind, and I think Bitcoin will do that for it, right? We've got this option, and then if Bitcoin breaks out of that triangle pattern that you saw before and starts to moon up, with Ethereum, we've got this baby here, and I think that's interesting. I think the Ethereum levels are much more clear for trade. I'm talking about investing. I never sell crypto unless I'm trying to buy property. And even that, I suppose, altcoins, never classic coins, right? So I'm not saying myself for your investment. I'm still talking to you guys about trading here. Now we've got these crazy, for me, remember liquidity, this liquidity schematics that I drew for you guys in a previous video. Look at that. Now check this out. This is clean, man. This is clean supply, very fresh. This is also a clean supply, in my humble opinion, that actually hasn't been used that much. We still have our previous sell that I hope everyone is still holding, because how else do you guys, how do you guys build accounts? You can hold that equity make capital, and then obviously close your trades. Take money from the markets, of course. I don't want to control you, but I'm simply saying you're never going to get a big account if you don't take time to build a big account, right? And that means holding trades, not withdrawing to go post on Instagram and all that nonsense, and growing your account. But you know, these two big sales, right, supplies have one clean demand to face. And if Ethereum, folks, if we were to get below 900, below 1,000 US dollars, then it's done. I stop everything. I stop altcoin. I will willingly sell a car, one of our cars. I probably would, you know. We don't care about such things. Why? Because I want a lot of money at the same time to buy Ethereum at $600. Hey, this will change your life forever. All right. So just I'm giving you this up front right now. There's no need for me to talk about Ethereum for the next 10 weeks because this is the game. This is the only thing I'm doing in this chart. Holding cells, looking for cells. I'm not to say I don't think I necessarily want to buy at this demand, but I'd like to see our price react to this demand. We've got proof of stake, we've got the merge, right? People like Ethereum didn't expect because of the merge. Markets price in everything. They announced that thing 3 months ago. The markets price in everything. Now you need to price in this. Bitcoin dominance is still at about 40-something%. So this matters. What Bitcoin is going to do is going to matter, and how Ethereum reacts to it is going to matter. All right, I gave you game. Don't say I didn't give you game. I gave you lots of game. Ethereum, AUDNZD is the next chart that I said we're going to look at. I'm trying to hurry up, folks. I appreciate your attention, though. I do. I don't think I'm in this trade. Why am I not in this sell? I know for a fact I am not in AUD anything. Okay, there was a lot of clarity finally, right? Remember when the stupid range price broke into a supply? I marked it, but I'm not in it. So it's kind of like leaving money at the table for me and for you, right? Where you analyze perfectly, but you're not in all your trades, right? I don't even know why I'm not in this. This has been a clean drop. And then we had a couple of supplies in between, right? It's not your bearish engulf in supplies, the one that we'll talk about in module 1, where we have to count the imbalance, right? And see if the imbalance actually makes sense. And does it even make sense? To me, it's a no. But anyways, bearish engulfing after that, and then another bearish engulfing. It's just falling. This is literally falling without us. What happens now? This demand is marked red for a reason, right? It's been multiply tagged. Glass effect, so be very careful. And so the question is now, how far will the drop go? Ooh, look at that. Look at that. If we clear this, then we're in trouble, right? So markets, technically speaking, are sitting on top of a weekly demand. But the question is, will it last? Will it work? I don't know. Please be on the lookout for that as well for yourselves. And just, I can't give a good signal because we are so down the tail when it comes to Euro Swiss franc. We are so down the tail. We are incredibly down the tail here. Right, that's fine. Keep it pushing. I think we're gonna have to. I'm gonna skip that one. I don't want to force a trade. AUDJPY. So sometimes the assets I choose is because I realize I'm not in them, right? So that's a clean touch. All right. I don't know if this is gonna work. A part of me felt like I should break even on Friday, and I didn't. Because we only tagged in on Friday. I don't know if you guys noticed this stuff, but look at this. This is literally 1:3, by the way. So markets are like 1 day away from dropping, but this is just basically relative strength. And again, we saw for a fact that this is the week of the Bank of Japan. It's, Thursday, Friday. Outlook, monetary policy rate, press conference, tentative press conference. Quite a big week. So this chart, I would break even. I'm going to break even, on Monday. And then we'll see why. Because technically speaking, look at every time, AUD falls, right? We get these clean rallies to the upside, right? And now, of course, we're in contact with a stronger supply, a higher supply, I'm assuming, a weekly supply. But I still believe that if the BOJ doesn't give like the strength indication that there's a high chance that they will be looking for continuation of a weak yen, then yeah, this is gonna go up, right? So it's a short-term sell. don't get too comfortable with this sell up until we have clarity on how the banks think about their asset. Right, if everything continues and we've got a weaker Japanese yen, then yeah, it's going to keep going up. But if they indicate they want to strengthen the yen, then yeah, you can expect some supplies to hold moving forward. And I just don't know if this is one of them. So take profit, close it. You know, so far it's run 1:, it's just a 1:1. It's a nice free fund trade. If you want to wait for a touchdown there, you're taking a risk, you know, but it might happen. You get a 1:3. But just be very mindful. I closed this a long time ago, didn't go past this area. Right now, I regret it, but look at where we are now. Price did come back full circle. So yeah, we shall see with AUDJPY. CADJPY, you also saw that there's a big wick for the CAD, right? You saw, I brought these assets up for this reason, guys, right? So it's I can't tell you when, but I know there's some, there we go. Monetary policy for CAD, Bank of Canada rate, right? The overnight Fed fund rate, and you can see, you know, because we focused on the dollar on this channel, we need to change that, right? Check out other central banks. They're just towing the line, man, given market expectations. So you want to look at the CAD, you want to look at oil, right? I've taught on this a couple of times, right? But same thing here, even here, I'll probably break even. I don't expect to make a lot of money from these charts because, you know, markets could be forced to quickly, violently retrace back. But if they drop, then we're already in the money. So breaking even for me, excuse me, is a better deal. And the last chart for the day, Euro AUD. Thank you so much for spending time with me. Back to the future with crypto. Don't forget to comment about that. Back to the future with crypto. Right, so it cleared a couple of stop loss hits here, and I'm not in this. This has been a terrible chart for me, right? This blue, not blue, sorry, stop loss hit, and then I tried to sell here again, stop loss hit, and this is just me not acknowledging euro strength, I guess, against, you know, AUD, because overall for me euro is just weak, right? But you can see, you know, markets have been fighting for that, you know, top spot. This was like a strong weekly supply, but then again, you know, this is a slight disadvantage with set and forget. You're not always looking at the charts, but on a scale of averages, you make enough money, so it's fine. You always profit, you average out profitably, but you'll get moments like this. Why did it say? Look at those parabolic structures. If I was looking at this chart on a daily, every single day, there's no ways the sell would have worked, right? Markets are too parabolic. There's no distribution to the supply. The same rules that I keep talking about, right? So yeah, this has been an L, and psychologically, I think it's a good idea for me not to give a signal on it right now. I need to go back and calculate how much I've lost from EUROJPY percentage-wise, and then see if it's even worth moaning about, right? But this is it. This is the chart right now. I'm going to delete this supply. I'm going to delete that supply. None of this stuff has worked in terms of the supplies on Euro AUD. And that's okay. I think I had 2 SL hits at different times on this chart. So even this drop here, I'm not in it. I don't want to lie to you. We shall wait and see, right? But if you want to trade it and you want to take a risk, you know me, just because I've lost on the chart does not mean I get to change the rules. The rules are there are a couple of other supplies to try, and the ultimate supply is where you've got a governing supply, weekly supply, and a daily supply all up in here, right? So you can try that. If it works for you, you'll let us know. 365, hope you guys are doing well. Top 3 things to consider. Number 1, trading psychology course is a must. 1st of November. It's only $100. Or you can get everything for just $220 right now, or get everything with a payment plan. So it's like $150 per month and $100 per month right now, because after the trading psychology module drops, every module is $100. So you're going to end up paying for $400 for something that you could have gotten for $100 or $200. And then something completely separate, if you want us to start trading crypto, which is something that's extremely enjoyable for me anyways, just write Back to the Future. The number of people write Back to the Future crypto, I'll then consider launching the service. $15 US dollars per month. We can even come up with a contract, like how many signals do you want, blah blah blah. But for me, I take what the market gives me. So I'll just be dropping charts. I'm buying here, I'm selling here, I'm buying here, I'm selling here in 1 video per week. It won't be a course. Please understand, it's not a course, it's a signal service.
If you're not a 365 registered student, then it's going to be $30. I think that's what I wrote when I came up with the idea. So I'll just stick to those numbers. They sound a little bit too cheap. They sound disgustingly cheap. But anyways, yeah, it's fine. 365, shake my hand, baby. See you on the next video. Peace. This was good. Time to go play golf, man. Cheers, guys.